Morning all, how are we all doing? How is everybody this fine morning with the pound collapsing? Good bit short, isn't it? Morning Blue Trader. Morning Peter, morning Kennelly, JC, Amy, Jerry, Burke, Christian, Leonard, Prince Zulu. Good name. Virginia, morning. Andres, how are we doing? So we just had the pound news in case anybody didn't notice. Yeah, interest rates potentially going to start coming down on the pound. We've basically got the inflation figures dropped, which is great. And they didn't just drop, they dropped by a significant amount as well, which is really good. So potentially weakness in the pound for maybe a few days while the market sort of takes that into account. So we were on an 8.7. We were forecasting an 8.2. We got a 7.9. Core inflation's down. Everything is down, basically, which is great news because it means that the interest rate rises are doing what they should be doing, which is bringing inflation down. However, what that means is that it takes the pressure off the Bank of England to increase interest rates. So we were forecasting jumping to 6 to 6.25 as our terminal rate for the pound. The market is now calling, instead of a 0.5 increase in August, they're calling a 0.25. So if that figure, that hasn't updated yet, by the way, that will update. If that figure comes down more, it takes the pressure off increasing that, which makes the pound less attractive, which is why we get the prices dropping. So that's good for the pound. Well, it's not good for the pound. It's good for us in the UK. We had the CPI figure quarter for the New Zealand dollar overnight, which was 1.1. So that's positive for the New Zealand dollar. It's not good for the New Zealanders, but it is good for the New Zealand dollar. So we were forecasting a 0.9 on the quarter. We got a 1.1. So theirs is actually going up, which is bullish New Zealand dollar. So we've had bullish New Zealand dollar and bearish pound. As you can imagine, pound New Zealand has had a bit of a whippy morning. So we had a big, strong push up and then a big pull back down again. But that one's pushing back up again. So, yeah, so that's basically the news this morning. We've got housing starts this afternoon for the US, which doesn't tend to do a lot. So probably give that one a miss. It doesn't tend to do an awful lot. Sometimes it does, sometimes it doesn't. Hit and miss. But there we go. Other news, there's not a lot else overnight that I could see that was particularly impactful. Nothing out of Japan. Japan's Coast Guard, North Korea may have fired a ballistic missile. North Korea fired a second possible ballistic missile. So that's all that's been happening over there. Apart from that, we've got the CPI for the New Zealand. And then obviously we've had the CPI for the UK. So this bit of news here is the investors shun bets for a 50% rate hike in August, now seeing a 65% chance of a 0.25%. So potential drop. Peak now seen below 6%. We were looking at 6 to 6.25, as I said. They're now looking for probably 5.75. So that's quite a big drop. It's 0.5%. So that's news overnight. As you can expect, obviously, the pound has collapsed on that. So lots of decent moves. I've banked 1% so far this morning off the pound moves. Got taken out. I put a trailer on these pounds this morning. So there's my exit on that position. Price was there. So they spread it all the way up there. I had a trailer basically just in case it ran. And I wanted to get out with that profit in case it popped. So I put a trailer on it. Obviously, all they did was, before the news event, they spread and took me out, which is great, which means I missed all of that lovely profit. But anyway, still banked it. Pound Swiss, that's come down. I've got a long on that one. Pound Yen, I'm not in. Pound New Zealand, I'm in short. I put a stop break even on that one, just in case. Pound US dollar, same thing. Yeah, I put a trailing stop 15 pips away. They spread it more than 15 pips, took everybody out, and then moved it in their direction because they don't want to pay you on that. So There we go. New Zealand, as you can see, has had a negative reaction again to its CPI figures. So this New Zealand dollar is nuts at the minute. It doesn't matter what happens with the news, whether the news is bullish, bearish, or what. The New Zealand dollar just does not react to fundamentals properly at all. So New Zealand dollar should rally on positive CPI because it means they are going to put the interest rates up, which is bullish New Zealand dollar. CPI figures go up more than expected. It tanks. Last time, as we saw from the Aussie New Zealand dollar, interest rates, as expected, bullish New Zealand dollar, absolutely collapsed. So that is a positive news reaction on the New Zealand dollar. Should be completely the opposite direction. So again, wrong direction. Complete mystery, the New Zealand dollar at the minute. The market's got no clue what it's doing with it. But anyway, that's the news for the morning. Markets are about to open in 2 minutes. So we'll have a quick look at the DAX before the open. Made an absolute fortune yesterday on the US indices, the Dow specifically. Biggest move I've seen for a long time on the Dow. Literally didn't stop. I got out of the Dow here. I got in here. That was the first opportunity to get out on a trailing stop. Just didn't let me out. And then I took a short here. And I got out somewhere around there. And I broke even on the second half of it. So I managed to grab that out of it as well. But absolute monster move on that yesterday. S&P flew. So the Dow, obviously, huge update. S&P, massive profit on that one as well. NASDAQ, a little bit trickier. It did rally. But yeah, so big moves. So looking at the DAX today, the DAX had a rally off of the news yesterday as well, or not off the news, off of the bullish moves with the US markets, not quite as much. We have literally this morning tapped exactly into the double top. So this is a potential resistance for a drop back down again. Yeah, but it's earnings fortnight, so this could go absolutely anywhere today. So we're just going to go with momentum as usual. But the moment the US indices are rallying again, we're new highs on the day already on the Dow. Look, Dow's already off. So DAX today could well just fly to the upside along with the rest of the indices. So we are at this high. So upside potential basically is potentially an M pattern reversal double top where we are. Downside could go absolutely anywhere. Previous day's low is 125 ADR. Other than that, there's nothing below us. So if we're going to go down today, we can go wherever the hell we like. If we're going to go out the highs, you've got no resistance above that level. So it's going to be a tricky one. So there's your pre-market break. Bit tight today, the pre-market. That's a very, very tiny little tight range, that 15-minute and that 5-minute. So you've been longed on it if you took it, but when you've got these tiny little ranges, very dangerous for whipsaws. So I'd wait for the 5-minute opening range this morning and to see how that plays out. But if it does go long, obviously watch that high. If we go to the upside on the Dow, look, we have got a resistance potentially from last month, which is basically 150 ADR today. So if we break that 2-week high, you've got previous month's high, which is a double top at 100 ADR, and then 150 ADR, you've got the kind of all-time high for the moment. So watch that level as well. But we'll see where we go. There's tons of ADRs today, so we'll have a look through all the FX pairs in a minute, but we'll just see what this does at the open with the DAX. Afternoon, day trader FX. Morning, it's time. Afternoon, morning even. Lenart, at 11 a.m. there will be Eurozone CPI. Why can't I see it on Forex Factory? Because it's not red news or orange news. It's not important. You'll see it on Financial Juice probably. Financial Juice doesn't seem to load it properly. There. So those are your Eurozone CPIs. 10 o'clock they are for me, but yeah, 11 o'clock, whatever your time zone is. But they're not. You'll find they'll be on here, but there'll be yellow news. Look, Wednesday. There we go. Final CPIs for Europe. Basically, they're not important because we know what they are. Yeah, we've had the French and the German CPI figures already. The Eurozone is made up 90% of French and German CPI. We've got those. We know what they are. So this is just basically a calculator job. This is the total of the French and the German CPI. There or thereabouts. It's not the reason it's not impactive news is because they've already been released previously. So they're just you might get market reaction to them, but I mean they're not. It's not something that's going to. Market's not going to be shocked because we know what they are. So we've already had the reaction, basically. Okay, so 15-minute ORB is long, or pre-market, I should say. ORB is long. So if we can get up to those highs, you've got a nice, probably 2R there, I would say. 1.5-ish, something like that. Round about 1.5R if we get to that high. And if we break that high, yeah, could be a biggie. We'll see. But your 5-minute opening range is obviously within the pre-market range. So that break is a good one to take. That break is a good one to take today. And it looks like it's pretty much going to be your 5-minute opening range. So that's probably the best break of the day, actually, just taking that 5-minute ORB. Which is there. Give that a couple of minutes. We've got 1 minute left on that. The Becker. My spread on the DAX is 310. You recommend this with the ORB? That's wide, very wide. Look at my spread. I don't know if you can see my spread, but there is none. That's the maximum I'll get on spread. DAX, which is like 21. It's nothing basically. So if you've got a broker with the 310 spread, that's the opening range. Do you mean 31? Well, it depends on your broker, doesn't it, as to how many digits. If you've got 2 digits after the 0, then you're going to have 310 instead of 32, for example. So, or 310 instead of 31. So yeah, I mean, 2 to 3 is acceptable. Tighter the better. Think about making 1 extra pip or 1 extra point on the DAX every day over a year. 365. If each of those is 100, making, you know, it's just maths. But I mean, yeah, as tight as you can. There's no right or wrong. It's as tight as you can get. The reason I like Robo Forex for the DAX is they got a very tight spread. There's lots of other brokers that have got tight spreads. You just have to test them. All the markets are out the highs. So ORB is long on the DAX. Just coincidentally, yesterday, I made 6.5% yesterday on those indices. If I'd have held my futures position, I would have basically paid my mortgage for the year. I didn't. I got probably about 1/10 of that move. Still made $1,000 on it, but I got 1/10 of the move. But those are the days yesterday, these days yesterday, where you get those massive rallies on the ORB. Those are the ones, where are we? There. You know, that move there, you can see that trade there. These are the ones where you absolutely kill it. So depending on where you had your stop on that opening range, you had somewhere between kind of 6 to 10R yesterday. If you're risking 1%, you passed a proper valuation yesterday, literally on one session. That's if you traded one instrument. If you traded all three instruments, you passed prop twice. What the OLB is all about, playing the big moves when they occur. Okay, so OLB is long, so we'll see if we can hold that long position today. May even get a day like we did on the indices yesterday. Would be nice, wouldn't it? It's the funded trader. Oh, what, your spread? I don't know. Basically, your spread, yeah. Your spread needs to be something like that. Yeah, or something like that. Yeah, if your spread is something like that on a 5-minute chart, that's untradeable. Yeah, that's a candle. You can't trade that. So if your spread is tiny, the lines, your bid and your ask lines are kind of that far apart, it's acceptable. If it's any bigger than that, you can't trade it. It's not. It doesn't make any impact on any higher time frame. Higher time frame, the spread is irrelevant. 5-minute scalping, and if you're stupid enough to be scalping on 1 minute, it's everything, absolutely everything. When you enter a position and you're scalping, you're using high risk. If you're using high risk, and as soon as you hit the buy button, you are 0.1% in drawdown on that trade. You know, you get 10 bad trades. That's another % of your account that's lost. Not acceptable. It's got to be tight to nothing if you're trading 5-minute. Right. Let's have a quick look at the ADRs today while we're waiting for the DAX to decide what it's going to do. So obviously we've had New Zealand dollar news and we've had pound news this morning. So those are the two obviously movers, as you can see. Everything is New Zealand and pound base. So first one, Aussie dollar, New Zealand dollar. That's now retracing dramatically. Look at that. So that's 150 ADR. Your reversal alert on that has just triggered. Literally, 1 minute. Yeah, literally just triggered. Why are you not painting? Come on, chart. Why is that not painting? Chart problems again for some reason with this. But there's your reversal alert, which is just triggered. Oh no, it's just about to trigger. Sorry, that's why it's not painting. Sorry, early morning. When this candle closes, that will paint. So there's your short entry off of 150 ADR, but you've missed all of that on this massive drop. So the New Zealand dollar seems to be rallying up this morning. There you go. There's your reversal alert. Just gone in on that one for a short. So that's 150 ADR reversal. You've got the euro pound, big strong push up. I'd be very wary about trying to get on the opposite side of these pounds today. That news we've had on the pound is what we've been waiting for from literally months. So yeah, euro pound is a long, and if you try and mean revert this, you could be getting straight into an initial position against a multiple day move, if not multiple week move, depending on how the market reacts to this pound news. So that's, I put a note in the Telegram group this morning about this. Your ADRs basically today on the pound, just be careful about taking them. They may well pay out, you know, so they might all, you know, just fly up and undo the entire thing. But quite possibly you're just going to be fighting a losing battle today, and you're just trying to catch a falling knife all day. So if you're using a stop loss based strategy to try and take these, I'd be very wary. If you're trying to get into a position long as an initial entry, again, just be a little wary. Bear in mind, all of these pounds are also going to be RSI extensions. So if you're trading H1M5 mean reversion, you're going to get entries on these on H1 as well. This could well be down here in the next few days. So just be prepared for that. Obviously, they will profit take off of the move, but we're not sure how strong this move is going to be against the pound at the minute. So just be careful. So euro pound, that is over 150 ADR. Euro New Zealand, big strong push up. That one's just reversing now. M5 reverse alert has just gone in. That's basically pretty much the same as the Aussie New Zealand. Big strong push on this New Zealand dollar suddenly. Your pound CAD. So pound CAD, you're not going to get a reversal alert on that one until we've actually undone the move. So scrap that. Pound Swiss. Again, same story. None of these you're going to get reversal alerts on until we actually undo this entire move. So actually, if you're trading H1M5 mean reversion, you're probably pretty safe because you're not going to get an entry there. However, if this does make a new low, you will have this support rectangle jumping back down to here. So you will get a tight entry, potentially. Not sure if it's actually going to get all the way back up there, though. So just be careful with these today. Might even be worth, if you want to, if you're running the EA on a VPS, go and basically turn the EA off on the pound pairs for the moment, unless you want to get into them. It's entirely up to you, obviously. They may well, I know as much as everybody else. Yeah, you're listening to a guy sitting in a room trying to predict the future. I can't. This might go up here. It might not. I have no idea. But that's very, 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 very bad news for the pound financially moving forward. So that's what I would expect off the back of that fundamental. But fundamentals, as we know at the moment, as we've seen from the New Zealand dollar this morning, not necessarily doing what they should be doing, are they? So that's the pound Swiss. Pound New Zealand, a bit of a whippy one, this one, obviously with the New Zealand dollar and the pound news coming out. So we've had a big, strong push down. We've had a big, strong push up. We've done basically ADR down, ADR up, and basically we're doing an ADR down again. So this one's probably going to be driven more by the pound today than by the New Zealand dollar. So again, shorts. I'm already short on this one, as you can see off the H1M5 from yesterday. I almost got out of this. My TP was around about there, but TP is basically down there. So that's where I'll be getting out before that double bottom in that propulsion gap. Pound US dollar. Again, shorts on this one. Accidentally got out on a trailing stop on spread. Nothing I can do about that. Target, I am targeting above that high, which is this propulsion gap. These ones today potentially could act as support at 150. But again, in theory, we should be seeing a continuation drop on this. And we are anticipating some Canadian and US dollar strength to come through and profit take moves to start on those drops that we had there as well. So this could actually be a big, strong 200 ADR day today for this one. New Zealand dollar CAD. That one's dropped down. So I've got a long on this one, which is, I think, just gone in on the M5 reversal alert. Yeah, so there's your reversal alert there. There's your entry, long. So New Zealand dollar should be a long off of that news. We've had a positive inflation figure. Should be bullish New Zealand. Going to take it because fundamentally it's fine. It's come off of 150 ADR beautifully. That should be the expected move, but we'll wait and see. New Zealand dollar doesn't always do what it wants to do at the moment, does it? New Zealand dollar Swiss, 150 ADR, just about to get a reversal on that one. That support rectangle's holding. Swiss franc is still very strong at the moment, which is holding a lot of these pairs down. And New Zealand dollar, US dollar. So your reversal alert's already kicked in on that one. Hasn't updated properly there. So there's your long entry on the New Zealand dollar, US dollar. Yeah, so there's all your ADRs. Weekly ranges are hit as well. There's a few weekly ranges there you can see, mainly pound-based and New Zealand-based, obviously, because that's what's been moving. So you've got weekly mean reversion opportunities. We are only on Wednesday. Yeah, so euro, pound. You look at these on the hourly. We're on Wednesday. That's Monday's low. That is euro, pound's normal average weekly range. It's done. So potentially they'll start a mean reversion off of it. We're going to have a whacking great propulsion gap going in here in a minute when this candle closes as well, for them to come back down into retest. So there's all these weeklies to look at as well. And there's quite a few RSIs. Let's just quickly catch up on the DAX. So DAX has just pulled back off of that high back into inside range. So we'll see if this is a pullback. So obviously open, high, higher low, higher high, looking for this propulsion gap to put in a higher low. If we're going to continue to the upside, obviously this is a weekly level that we've bounced from. So there's the propulsion gap just filled. So potentially we could continue, but this could also be the start of an end pattern reversal. And we are going to come down. We are very, very, very exhausted on this DAX, remember. It's very much due a profit take on this move, which we haven't had yet. But it's earnings fortnight. It's crazy season. So there'll be sector purchases going on all over the place, as we saw yesterday. Yeah, this didn't happen for fun yesterday. This happened because there was a massive stock purchase on earnings. So talking about earnings. So today, we've got Goldman Sachs pre-market. Let's have a look at what they're doing at the open, pre-open. Okay, so they're buying Goldman Sachs as well. So banking sector basically doing very well today, this week. So the pre-market yesterday was those two. We got the big reaction off of those. Pre-market today, we've got Goldman Sachs, so that will have an impact on the open today. Aftermarket today, we've got Netflix and Tesla. So the aftermarket news releases basically affect the next day's open. So depending on what's happened with tech, we may well get a big move tomorrow in the NASDAQ. Likely we will. There's a lot of people at the moment buying Tesla. There's rumors of very good earnings coming out for Tesla. So we'll find out, obviously, after market today, if that is true. And if that is true, we're going to get a big pop on the NASDAQ. So times like this, if you're trading futures, you can trade the futures market basically in Globex, because you're going to get a lot of strong moves in Globex. When these aftermarkets come out, the next morning, you're going to get movement. So the Globex session, which is the session before the New York Open, tends to be, it's like Asia, it's pretty range bound normally. But when you've got earnings, you've constantly got something that is impacting the market. And obviously, as the market trades pretty much 24 hours a day on Globex, you've got opportunities to trade these as well. So just looking at this Dow this morning, looking like a very good buy. Very decent moves on the Dow at the moment. I say very good. Yeah, that's normal Globex. And then obviously it does kick off as we get sector purchases started during the Frankfurt session with the DAX. So it looks like that's trying to rally along this morning as well. So good opportunity there. So DAX has pulled back into the range, not going anywhere just yet. All terminals frozen. Back to life. Right. Let me just catch up on the chat. Sibo, please advise, how do you interpret the previous day's high and low? Yep, support and resistance, basically. Is it the same thing as the previous week's high and low? Yep. Basically, high and... So on... let me just take these off. Actually, let's just go to another. So this indicator on my chart here, purple lines are monthly levels. Black lines are weekly levels. Blue dotted lines are yesterday's and previous days levels, yeah? So if you think investors, right, they look at the daily chart. So they are reacting off of daily price movement. Yeah. So they watch support and resistance levels where price has turned and they put orders there, limit orders in the market. Yeah. So the reason price reacts at support and resistance is because the market has placed orders there. Yeah. So think about this level here as an example, right? There will be millions and millions and millions of dollars of orders sitting up at that level, right? Placed by the banks to add to that position. Yeah, they drove the market short. If the market gets back there, they want to drive it short. Same as that level there. Yeah, we pushed up into that level. They sold it. Next time we pushed up, the same people that sold it again. Then the buyers tried to buy again. And then these guys that sold it twice before said, no, we're going short. So then the buyers went, all right, whatever, we'll flip long, short and go with you. Yeah. When we get back to these levels, if these guys are still short, they will do it again. They will have orders placed already in the market at those levels to get themselves out of the positions they're long on or to add into the positions they're short on. This is why support and resistance works, because it's just banks placing orders at levels in the market. Banks don't look at charts. The banks don't see any of this. Banks see numbers on a screen. They see, in this case, for example, the banks will see 88,400. Yeah, they'll be seeing 86,500. Yeah, so their algorithms will be told to buy at 86,500 and sell at 88,400. The limit orders are already there. If they're long on this break and they've bought it, the limit orders are already there to get out of those positions and profit take. This is why market structure exists. Bank movement, profit take. What they do is they take profit at previous levels because that's where they started moves from. That's where they end moves. Yeah. So every single line on the chart that you see is a support and resistance zone in the past, which is basically telling me where price has previously moved from. When we get to these levels, price will do the same thing over and over and over again because the banks are buying it here. Same reason as propulsion gaps exist on my chart. This is where the banks entered a large order. If these guys that are long get battered back down to that level and they still want to be long, they will add to their orders, which is why we see price moving from propulsion to propulsion. This is why the propulsion gap indicator is on there. Yeah. All these propulsion gaps are large bank orders, which have been filled. Yeah. So we push up, we pull back, we push out again. It's all the same stuff. It doesn't matter how you interpret it. Yeah. It's support, resistance, it's targets, it's whatever you want it to be. It doesn't matter. But everything in this market has a 50% chance. If it hits that level, it's either going to bounce off of it or it's not. If it doesn't bounce off of it, you look for the next place it's going to bounce and you get that one. If that doesn't work, you look for the next place and you get that one. One of them is going to work. When it does work, you get out. So you've got to have as much information on the chart as you can about where price is potentially heading or likely to bounce from or head to or bounce from, whichever way you want to look at it. But they're all levels where there are orders placed. So stock market, they buy yesterday's low, right? In an uptrend. Yeah. Let's say we got a daily candle like that, right? And then the next day's candle closes like that. Yeah. There will be orders placed at yesterday's low because they pushed up, right? If price pushes back down to yesterday's low, the guys that started that move will have orders there to add back into it because they're trying to defend a level. Think of it like a war, like trenches. Yeah. If we push forward and make a new trench, we win that round. If they push us back, they win that round. Every single one of these candlesticks, the only information it's giving you is that round, the buyers won. This round, the buyers won. That has nothing to do with the next round. But you can see where orders have been placed in the market previously by banks because there's big candlesticks or there are points where the market has turned. That is where the banks turned, shifted direction, added orders in the opposite direction. Big candlesticks are where banks accumulated orders and then drove the market in one direction. If it comes back and tests that, it tends to bounce out. That's all support resistance is. That's why it works. And this is why I keep saying every course you ever buy, right, is going to teach you the same thing. Whatever system or strategy you buy, whether it be a £99 course or a £1,999 course, or whether it be a $99 indicator or a $2,000 indicator, they're teaching the same thing. Price moves up and down through time. There's not one system or indicator on the planet that can tell you when the market's going to turn because the banks decide it. So you need to know where the banks are. They're short there. There's a news event that's driven straight through that. Nothing you can do about it. It's fundamentals. Fundamentals have shifted as we got to resistance. If we didn't have a fundamental news event on the pound today, that probably would have bounced. So you just need those levels in there to understand where price is going. Average daily range, the ADR indicator is there to show me what the average daily range of this instrument is. On average, it does that 58% of the time. So if we get up to there, and there's also a previous level I mean, look at this as a prime example. Look, high of that day, dotted line. Yeah. Yesterday, what did it do? Pushed up into the high of that day, and then the sellers added. They tried again. The sellers went, no, we're short. Told you we were short yesterday. We're still short. You're going to go down. Okay. The reason that happens is because the banks have got more money than God. And it doesn't matter how many people want to buy this thing. If the banks have got more money than you, it's going the way the banks want to. That's why they make money, because they can drive price down. If they sell it here and more people want to buy it than sell orders, it will push up. But if I'm a bank sitting here with an unlimited amount of cash and you keep buying, and I will just keep selling to you until you basically run out of money, eventually you're going to go, I can't do it anymore. And it will come back down again. This is what we call iceberg orders, which you can see in the futures market. So iceberg orders tend to sit at daily highs and lows. Yeah, look at what happened yesterday. Bang. Couldn't get through that because that's where they sold it. They bought it yesterday. So that's all they are, support resistance. That's what the market does. Go back in time, go back in history. Been happening ever since there's been a candlestick painted on a chart. It's exactly what everybody will teach you in a course. They will just call it something different. Supply and demand. Everybody's going mad about supply and demand. Support and resistance. Exactly the same thing. It's a block on a chart instead of a line. It's an area where the banks bought it. That's it. So if you wait until price gets to that level and you wait for the market to reverse, or better still, to give you an M pattern reversal confirmation at a previous area where it did the same thing, the probabilities of the trade working are higher. That's all that is. Doesn't mean it's going to work. The odds when you hit the button there are 50%. Because when that candle painted negative, doesn't mean the next one's going to paint positive or negative, does it? Yeah, it's like everybody sees like a huge hammer appear on their chart, or a shooting star in this case. They go, oh, it's a sell. That has got nothing to do with what the next candle is going to paint. Because that was that time. This is this time. Right now we've got a big green candle. What's the next one going to be? Call it. I don't know. Neither do you. But what I do know is we're at an area of previous support where they bought it. And it looks like they're buying it again. That's all you can go on. What's happened in the past. But nothing in the past will ever tell you what's going to happen in the future, will it? Because we can't predict the future. DAX has flipped short. Hedged on the DAX. So about to stop out on the long. Again, DAX, why are we turning here? What's this big black line? Where we turned last time. This is what I said this morning. Watch this level. It's never going to be exact. It's never that was a lucky hit. It doesn't hit exact. There's a video I've put up on the website and on YouTube about how to draw support and resistance properly. If you want to, but this video here, yeah, a support and resistance has to be a line. It has to originate from a line, because there is a point, there is a price where market moves, right? When the market gets back there, whether or not it bounces there, or there is dependent on the volume of buy and sell orders that are executing around this level. There's a battle going on here, because the guys that have been rallying in the banks to try and push above this price because they want to buy and sell higher, right, are trying to get above it. The guys that have sold it here and are in profit and try and defend their position and defend their profit are selling it here. There's going to be a lot of price movement around here and a lot of volume. You'll tend to find big candles around support resistance because there's big orders going in the market trying to jostle to see which way price is going to go next. So if you draw a zone around that line where price turned, somewhere around there is a good spot So if you get a reversal alert here or here, it's as good as getting it here. It's somewhere in here. And it will either work or it won't. You don't know. But that's, you know, these, I draw lines on the chart. So my indicators draw, you know, the blue dotted line is a high and a low to differentiate it. You could draw it as a block, but it's just of somewhere around. Yeah, somewhere around the area. There you go, Sibo. Answer the question. I'll post a screenshot in the Telegram later so that you can confirm. Confirm what? What I missed? Oh, the spread? I don't need to confirm. I don't need a screenshot. I've explained what spread is. Yeah, tight as possible. If you're not happy with how tight it is, go and change broker. I can't help you confirm whether or not your lines are that far apart or that far apart. You can see that yourself. Beautiful profit on EuroCAD yesterday. Again, you know, talking about support and resistance. Previous day's high. Yeah, we just looked at it, weren't we? So, yeah, if you took the reversal alert there, lovely. Very nice. Morning, Neo. Right, let's look at ADRs. Sorry, RSIs. So we've got quite a few hourlies. Now, a lot of these, again, are going to be pound-based. So just be a little cautious today with these pounds. Difficult to tell where they're going to go. So Aussie dollar Swiss is extended to the downside on the 4 hour. It's only just extended. We're below the 30, 25. The 80-20 level is kind of the best levels on the 4 hour, but it is below the 25 level. So we are nicely extended there below the 20, 25, whichever. Yeah. Looking for that pullback profit take move to start, potentially up into this propulsion gap. I've got one long on that from an H1 M5 mean reversion on Monday there. So since then, we obviously had a little down day again today. If this New Zealand dollar is going to rally on its news and actually do what it should do, which is rally on its news, the Aussie will probably get dragged along with it. So we should see a little bit of Aussie strength coming through, but we'll see. Australian dollar, we haven't got any. Yes, we have. Sorry. It's the right week. Yeah, we have. Oh, sorry. Yeah, we have got an Australian dollar news. So unemployment rate tomorrow, 3.6 forecast. So if we get the 3.6, it's not going to have much impact. But if we get anything positive on that, we've got another particular catalyst to go with that New Zealand dollar rise to hopefully help both of those rally. Market tends to react more aggressively on the Aussie news than it does the New Zealand. So hopefully we get a push off that tomorrow. So that's a nice looking entry long. Aussie dollar, US dollar. That is, sorry, is that, no, it's Aussie dollar, New Zealand dollar. Sorry, read that wrong. That is an H1 RSI extension to the upside. That was yesterday. Got an entry on that one yesterday in there off of that huge big move. Target is top of that propulsion gap there. There is potential for those two to be targets as well. I'm just waiting to see. I wasn't expecting such a big reaction off of this Aussie New Zealand on the New Zealand dollar news. So might make sense to move the target up there, especially if we're going to get Aussie dollar news, which is going to be positive tomorrow. So, but that's the entry yesterday off of the H1 M5 mean reversion. We're just extended again now above the 70 level. So divergence, for any of you that like divergence, we have beautiful RSI divergence, which is bearish. It's obviously come off the highs today. You've had your reversal alert on it. So there's reversal alert and entry short. I'm already in it short though. Swiss yen extended to the downside. Extended to the upside at the moment. So of all these yens, the Swissy is the only one really at the moment that's actually managed to make a new high. All the other yen pairs are still sitting to the downside without making new highs. This Swiss franc has had so much pumped into it over the US dollar drop. So all the money's come out of the US dollar and the Canadian dollar and been pumped into the Swiss franc. So the Swiss yen is the one that's actually made the most progress. It's an ADR hit today as well, just about. So that's extended to the upside. Really still not sure what to make of this yen. It's very difficult to read at the moment. We had the initial reaction to the shot across the bow. I think potentially we are going to get a pullback on this, but I'm still unsure as to whether that is going to be the new peak formation high, and we're going to start rallying to the downside. The Swiss franc obviously says the opposite at the moment, but that's because of Swiss franc strength, not because of yen weakness. So tricky at the minute. I've got longs on, and I'm looking for a decent 50% pullback on that move first. So Swiss yen to the upside. Not the best entry in the world, I don't think, at the moment to try and short that. I think there's probably still a bit more upside, a little bit more weakness in the yen. And you also got the other problem is where the hell do you go? Yeah, you're up at all-time highs, basically, on this thing. There is no resistance up at the highs. There's nowhere you can look at and go, right, this looks like where it's going to turn. So you can only go on price action. Speaking of price action, beautiful 3-bar reversal going in there. So bull move, indecision, bear move, market shift. So it does look like a good short. But I think the short, if this does go short, it's not going to be because of yen strength. It's more likely going to be because Swiss franc weakness. We've had so much strength in that Swissy. They're going to start unraveling that Swiss and putting it elsewhere soon. The pound, for example, is somewhere they're going to start to put some Swiss franc. Euro pound extended to the upside. H1 M5 mean reversion. This is a real tricky one as well. The euro is long. The pound was long. Now, I don't know what the pound is going to be now. Could be a long, could be a short. I think more likely a short. So taking a short on this at the moment with this extension, it is extended on the 4-hour. We're getting up to the 80 level. We've just broken out of a monthly support. The hourly, big, strong push to the upside, as you can see. So the next areas you're going to be looking at for resistance is going to be somewhere around these areas here. We are at potential resistance now. Yeah. So again, bounce, 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 bounce. Finally broke it. We haven't tested it before. We never came back up and retested this level. So this is the first retest that we're looking at now. So potentially we'll find a drive back down from here, because anybody that's short on this and wants to remain short on this from this accumulation break is going to want to add to those orders to keep the market short. However, the fundamentals today have shifted on the pound. So it's whether or not there's enough selling of the pound basically to keep this thing rallying. So it's nicely extended, as you can see. Yeah, so it's exactly the same trade as that one I took there. Yeah. Big extension, but we've got the fundamentals shifting. The euro rate announcement is not for a couple of weeks. So we got PMIs on the euro next week. Oh, sorry, it's next week. I thought it was, oh my God, is it the 27th next week already? It's the end of July. Been a fast month, this has. So yeah, we got the refinancing rate next week. We're expecting a 4.25 off of the euro. So that's going to be bullish, well, should be bullish euro. As I say, everything's a little bit weird with what the news is actually doing to price at the moment. But if we're going to get a few days of continued weakness on the pound off of the back of these CPI figures today, and then next week we get that strong euro, you're going to find yourself up here. Yeah, so there is potential for a big squeeze on this one. So it could just do normal market structure. It could be quite aggressive. Either way, just scale in gradually if you're going to, but could go either way, this one. DAX is flip short, and we are short. So see if we can get a rally down on this DAX today. So that's euro pound extended on both of those. Euro New Zealand, euro pound 175 ADR just hit. That's the biggest ADR so far today. Again, say watch these 200 ADRs on news like this is not unusual. Euro New Zealand, we've got beautiful resistance coming up here. I've got one position already on this one. So we're coming up into a monthly high there. First short entry was on that one yesterday. we pushed down today. We've had a big, strong, screaming move up. This New Zealand dollar, in theory, should power up, which means Euro New Zealand should come down. We're not having that reaction just at the moment, but we've got a nice monthly resistance coming up at 150 ADR. So potentially second entry will go on up here at the reversal alert up at that level if we get there. Average will jump up to there and I'll get out in propulsion probably, or ideally down here. So that would be a 50% retracement if they're going to put a new leg in. Pound Swiss. We've just hit monthly support on the pound Swiss. Again, I've got, this is the only long I've got on the pound because I've been looking to mean revert the Swiss franc strength. Again, one of those things you can't do anything about. We were looking for a mean reversion off of this big extension. Never came. We got 3 days of accumulation. We had a down day on the Swiss franc, an up day on the Swiss franc yesterday, and this morning we've had negative pound news. Nothing you can do. You just, everything's gone against you on this one. So 2 on it at the moment. So it's not the end of the world, and we've hit a monthly support. So reverse alerts all the way up there. I might put a manual on this. So that is 97. So that's 1.5 ADR. ADR on this is 66. So the 2 entries initially are 1.5 ADR apart. We're currently sitting at 67. So we're sitting at an ADR. So I'm going to put a manual on this. So pending buy stop above that high. So what I'm looking for is a higher low break back up. If we do manage to get that, which will really be weakness on the Swiss franc, unlikely to be the pound, I do want to kind of get in a little bit better on this. This is a nice monthly level. If it pushes down further today and we get a 200 ADR, then obviously if that is triggered, I'll get another position on. If this just continues to drop today, I'll drag that down. In fact, I won't need to, because if this makes a new low, the new market reversal alert will be there. If it makes a new low on that, that support rectangle will jump down onto that candle and we'll get that entry anyway. So I'll take that one off manually. But nothing I can do about the pound Swiss. Just the perfect storm at the moment. But extended on the 4 hour, extended on the hour. Yeah, we just didn't get that initial pop. Pound US dollar, hourly RSI extension to the downside. So again, be careful trying to long this. I am short at the moment. Got that annoying position taken off today on spread. Targeting that high to the downside. So I would, up to you. I mean, it might go, you know, this might be totally the wrong thing to do holding this, and it might come up here and I'll have to add on again. But based off the price reaction we've had there and the fact that London has not even attempted a withdrawal on that, I would say we're probably looking at more downside on that. New Zealand dollar CAD and New Zealand dollar Swiss. New Zealand dollar CAD extended on the hourly. Just got first long on this one. We looked at this one. This is an ADR hit already, haven't we? But that's extended on the hourly as well. Nice divergence. So looking good for longs, straight out of propulsion. New Zealand dollar Swiss, same thing. ADR extension today. First entry went in yesterday on that one on the RSI extension. We've got this drop, which we shouldn't have had on the New Zealand, mainly because we've still got this little bit of a strong Swiss franc. But exit on this, not getting greedy on this one. Just looking for kind of an ADR out of it. That's also extended on the 4 hour. Yeah, so look at that beautiful hammer. Again, hammer at the end of a run. Pretty good usually. So should be looking to come up and retest that area there, hopefully. And the last one is US dollar Swiss. So I got an aggressive drawdown control position on this one yesterday. This is extended on the 4 hour still. Only just though. So this extension we had was below 5. I used this as an example last week. We don't get below 5. I don't think I think maybe once I've ever seen the RSI extended below 5 or above 95 on the 4-hour chart. It just doesn't happen. The market has to have some kind of really obscure price action that is ridiculous to get it below that 10 level, and that's what we've got there. So this was the ultimate perfect storm. The Swiss franc got all the money from the US dollar as they piled out of the US dollar and the Canadian dollar off the negative news. They put it all into the Swiss franc. So, of course, this one moved twice as far and twice as hard. So this is massively extended. Any of the banks and institutions short on this thing are loaded to the eyeballs. So I've put an aggressive drawdown control position on this, which gives me an exit at ADR. If I need to take an exit at ADR, I'll obviously look at my P&L and see what everything's like as and when, if we get there. If we don't, I'll be exiting that with a 0.75 loss. So it's quite a significant loss, but I've also got the CAD Swiss on. So that's the reason I'm getting aggressive on these, because I've got two positions which are pretty much the same thing. Canadian dollar dropped, US dollar dropped, all the money from both of them put into the Swiss franc. So I'm double exposed. So I got an aggressive drawdown control position on this one as well, which is currently in profit. And again, just under an ADR. So all I'm looking for potentially today or tomorrow is a 1 ADR move between today and tomorrow, accumulative, and I'll be out of one or both of these. But if we can get a decent rally started, you know, look at H4 candles, the size of that candle, flip that and put that in as a green one. That's not just a profit. That's probably sitting at 1.5%, 2% profit on the positions. So all I'm looking for is a few hours of push to get out of these. But the Swiss franc at the moment is just not letting up at all. So we got news coming out this afternoon on the housing starts. We've got unemployment claims tomorrow for the US, and then we've got CAD retail on Friday. So just hoping really we get a couple of days of movement off of this US dollar and Canadian dollar in the positive territory, because we've had nothing but negative news. The Canadian dollar's had some positive news, but it hasn't moved. So, yeah, so there you go. So that's all your RSIs covered. DAX still coming down nicely on its way to profit on that short. Pound New Zealand coming down nicely as well. This is the one that I would expect today to actually be on fire. Negative pound, positive New Zealand news. We should be seeing a much bigger move than this. I would be expecting 150, 200 ADR on this. Be down here. Not getting there at the moment, though. Right. Let's catch up on chat. Sabiso, can you please give guidance on how I can go about back testing the market reversal strategy? I want to test how it'll work on the daily and H1 strategy. I have the reversal indicator on my MT4. So have you got the EA? You need to test it with the EA, basically. So just go into the strategy tester, load up the market reversal alerts EA. And obviously whatever settings you want to use, really. If you're going to use dailies, how it will work on the daily and H1 strategy. So if you're trading daily RSI extensions, so you would literally, best thing to do is load up the this one, the mean reversion strategy, or any of the mean reversion strategy set files out there that are, this one is H1M5. And all you're going to do is you're going to change the higher time frame RSI to daily, yeah, and select whether you want to use the 21, the 14, or whatever, and which levels you want to use. And then you're going to stick it on the hourly chart and back test it on the hourly chart. So that setting there, pretty much on the hourly chart, if I run that, will be daily RSI extensions and H1 entries with position trading. But you'll probably want to test different ADR. There's one ADR, 3/4 of an ADR, one ADR is probably decent enough. But yeah, just test that. Hopefully that's what you mean. Michael, morning. Steve, morning. How are we doing? Anybody got any other pairs they want to look at? Oil is the other thing I wanted to look at this morning. So yesterday we got a rally back up again. This weird price action off of the Russian grain export expiry thing kind of put a spanner in the works on Monday, as we didn't know what it was going to be doing after this. Yesterday, we just pulled straight back up within that range, had another little bull day. So it is looking like we do want to break and go for that $85 a barrel. So we managed to break this level, as we said, finally, after 3 months basically trying. We've had a 38 retracement, pretty much. It's not quite, but near enough. So either that is a flag break, potentially, or it is a pullback profit take move, and they're going to run back up into this level here. So looks good for highs. So I think this is a pretty good entry where we are at the moment. If you look at the 15-minute, we've had a reversal on 15. Oh, no, we haven't, because that candle. We have had a structure break on 15. So if you look at this level here, that is your reversal really there yesterday. So it's not a bad looking long with a stop under there at the moment, or a little bit lower than ADR. We've got oil inventories this afternoon. So if we get decent oil inventories this afternoon, which rallies the market, you can add a second position on a break of that high and be pretty confident you're going to get $85 a barrel, I think. So if you look at the risk reward on it, if the trade works out from where you are right now, you're looking at somewhere around about a 4-hour run up to the highs. It's going to take a week or so, probably even longer, maybe 2 weeks or so to get up there. But it's one of those trades where if it does run, you can add and average into it on the way up and double that to an 8R or 6R or something like that. But interesting, yesterday, I was expecting a down day yesterday because I was expecting this pullback to go deeper, but we didn't get it. So the fact that we rallied off the back of the stock market, if we get another bullish day on stocks again today, I think we might be off, but we'll see. DAX looks like it's stalling out a little bit down here. Potentially. Might be another tricky one on the DAX today. John, CPI got me out of euro pound. I've been offside on it for 2 weeks, out of half and going to run the other half. That retest, yeah. So if you're in the euro pound, been in it for 2 weeks. Long. The only trades I've got on this, there was that one there, that one there, that one there. But I suppose if you were taking a 70-30, you would have been in it. Probably from there or there, wouldn't you? And sat through that drawdown. Maybe. Again, you know, this is why I don't... You can't ever replicate someone else's trades. Even if you're using the same strategy and the same EA, you're going to get different broker price and all sorts of things. But yeah, if you're out of half of it there, I think there is potential for this to rally. I think this pound is... we've been waiting for some news on the pound that inflation is coming down for months. since Liz Truss screwed up in September last year, we knew that we were going to be in pain. And we've been waiting pretty much since the beginning of the year, that's February, for some kind of things are starting to come down. And that is the first indication today we've had that it is actually all happening. We'll wait for Bailey and see what Bailey says when he comes out next and speaks. But yeah, I would be thinking twice about trying to long anything pound. Kind of want to be out of this pound Swiss, but I'm in it. So hopefully it just does market structure on the way down and we'll be able to get out without a problem. But yeah, certainly we're looking to flip potentially on the pound. Gold. You mentioned gold. So gold yesterday would have had a lovely rally, obviously, on the stock market drop. So at the minute we're up at the monthly high. So that's last month's high, which is that resistance, which is that support. Again, support or resistance is never a level, it's always an area. So are we going to get US dollar strength is the question. Don't know. If we're going to get some US dollar strength, we're going to be coming back down into that propulsion down there, which I suspect we might well get. So if we start seeing inflation figures coming down everywhere, which may well start to happen now, and the US basically says that we're going to continue to rally, we might get that US holding and everything starting to drop. So gold is very difficult because obviously it is just a US dollar cross, but it has a little life of its own and is kind of linked to the stock market as well. Money gets put into it when we're worried about stuff. So if something escalates in Ukraine, for example, going up. So right now we're up at a monthly resistance and I'll be looking for a pullback off of that H1 RSI extension. But your entry really should have been on that one yesterday. But I don't know, oil. I don't trade it because it's too wild. Thanks for the follow, Thor. Oh, and Rorna. Sorry, missed you earlier. Rorna, thanks for the follow. Welcome aboard. Thank you, Captain Lee. Good night. Off Franco. Good night, Franco. Sweet dreams. Obviously in a different time zone. I've just got up. Sibo, would you be able to share your hardware setup? I see you move swiftly between charts. Well, it's just MT4. What do you mean hardware setup? So all this is MT4. You can see this over here. This is just the market watch. So you literally just click, drag, drop, change charts. Click, drag, drop, change charts. Nothing clever. It's just MT4. If you want my template's on the website under other indicators and template for MT4. I don't use MT5, so that'll give you the template with the other indicators I use. But I'm literally just dragging and dropping onto the chart. That's what I'm doing. DAX coming down nicely. So that's 2R TP. So loss on the long is 1R. Short TP is 2R. So if we get back down to here today, I can close all that out in profit. That's certainly a reaction at that high, isn't it, on the DAX? So double top. Again, this is a really good example of support resistance. Draw support and resistance as a zone. Yeah, that high there and that high there is the same thing. Just, everybody's like, oh, I need to double top to the pip. It doesn't work that way. The banks, what you've got to understand in this area here, there's hundreds of thousands of dollars of orders being executed. Literally hundreds of thousands of dollars of contracts being entered in there. Yeah. So the amount of volume going on around these levels means you're never going to tap something to the pip. You will get it tapped to the pip because limit orders will trigger at those prices. But once those limit orders trigger, they stop. And then you get either a, yeah, we'll be on board, or no, we fancy going long. And you get a battle. So you get this sort of thing happening around the area. So the new support resistance zone you would draw on this would be something like that. Bear with me one sec. I think someone's just come to collect my dog to be groomed. Yeah, that's right. And the wife is here. I was just checking if the wife was here or not. Dogs going to the hairdressers. Only problem with having a cockapoo, they don't molt. As they don't molt, they just turn into puffballs. So yeah, you extend the zone. So now, if we get back up somewhere around that area, you're going to potentially have a reaction. That's the way that it works. So we'll be looking for this sort of area for a reaction as well when we get down to there. And if you want to pick turncoat areas, somewhere around there, you'll get a reaction. Yeah, so price pushed down into this area here. Yeah, when it broke back down below it, it went up into that area again. Reacted. Yeah, roughly around that line, but never exactly that line. Yeah, that's why you draw everything in as zones rather than. I don't, because I just get in roughly around. I get in roughly around it anyway. I'm never accurate with anything because I can't be accurate because I have no idea when the market's going to turn. And now I can't select that yellow box. There it is. Yeah, got rid of all my support and resistance lines. Anyway, Hood Guy, news on Euro US dollar. What is the news on Euro US dollar? Not a lot. I am short at the moment, waiting for a pullback move on that. So got 3 propulsion gaps, which is basically one. So this whole area here is one massive propulsion gap, which is a 50% retracement on that move and a break of that accumulation. So I'll be looking for a retest down there when they take profit, if they take profit. When we get some strength in the US dollar, hopefully this afternoon. I think SIBO means my computer power. It's a 12th gen. I don't know. How do you see that? Oh, system. There we go. I don't know what my computer is. Powerful. It's a gaming PC, basically. So, I don't know, 12 core, i7, 32 gig RAM, big video card. Gaming PC. Do you think euro pound will fall now? No. We just had pound news. Yeah. Have you, Muzammil, even? Have you been listening this morning? Just had news on the pound that the interest rates have dropped, or the inflation has dropped dramatically. Interest rates are now going to drop by potentially 0.5% off of the initial target for peak that we were expecting. So that's negative pound, which is why I was saying with these ADRs today and RSIs today, Just be careful trying to buy this pound up. It may well go. It might do. I have no idea. Obviously, if I knew that, I'd just do it. But it's highly likely the pound is going to weaken moving forward. So how long for? I don't know. When it stops weakening, then you will get out of your positions. But for the moment, you are trying to fight a steam train potentially just started to pick up steam with this. We don't know. The trouble at the moment with the market is you can't tell what the hell anything is going to do. The New Zealand dollar's had lovely positive news this morning. Doesn't look like it, does it? So it's very difficult to tell. But fundamentally, that should be negative pound. So you would expect a few days at least of negativity in the pound. Shroud, what do you think of Swiss pairs? I'm long on New Zealand Swiss. So Swiss exposure for me is I'm short everything Swiss. I.e., I want everything against the Swiss to go up, basically. So you're long New Zealand dollar Swiss. Yeah, so you're short Swiss as well. So it's still starting to pick up. So we've had the reversal alert on CAD Swiss. You look at all the Swiss pairs. Aussie dollar Swiss is still coming down. I've only got first entry on that one. CAD Swiss has just started to reverse. Euro Swiss, we had the reversal put in. Took one off of that. We're just kind of retesting at the moment on that one. Pound Swiss, that is the not the best in the world. I've just got another one on that. This is going to be tough, I think, potentially. We'll see. New Zealand Swiss, we should have a decent rally on this one because we've just had New Zealand dollar bullish news. And the fact that the Swiss franc has been dropping now for roughly 2 weeks. If you look at the all the Swiss pairs, higher time frame, yeah, we've been dropping for a number of weeks on this now across the board. Yeah, US dollar Swiss, total collapse. Pound Swiss, big drop. Euro Swiss, big drop. Yeah, so everything has been dropping dramatically. We're at the point now where the market is going to find it very difficult to get any more orders on the Swiss franc because everybody's in, yeah, or no one's interested. So as soon as they try and sell and realize that nobody's interested in buying, they will flip buy and take profit on the move to get out because they can't push it any further because there's no other idiots willing to buy it down here. So they will start to become buyers, which will encourage the buyers, which will start the profit take move. That's basically the way it all works. What the reversal is. And that is a perfect spot to do it, which is why I've got an aggressive position on that CAD Swiss and the US Swiss. But yeah, New Zealand Swiss have only got the one position on at the moment because this is the first extension, decent extension we've had on the hourly on it. So last entry was there, long. Had a short on there, had a long on there. This is the long there. So we've got divergence. So looking for it to come up and retest that. So, you know, you hear me always saying in here, 2 options for everything, which confuses the hell out of people. And people contact me in Telegram going, you said in the live room that it could go up or down. Which is it? I don't know. If I knew that, I would do it, wouldn't I? Right. So basically, that level there is a support. So if market structure is going to go and continue short, we're going to pull back into resistance. So that's where my TP is, in those propulsion gaps. If this is going to become a new peak formation low and the market is going to switch market structure and come back up and test that high, it's going up. I don't know whether it's going to do that or whether it's going to do that because I have no way of knowing it. But what I do know is that it moves like that. So as long as it does that, I can get out there. I don't care after I get out whether it goes long or short. And if it's pushed really, really hard to get there, I'll get in short and assume it's going to continue to do that. And then when I get to there and do that, if it decides actually, no, we're going to go long, I'll scale in as it goes up there and wait for it to do that. Yeah, that's the beauty of position trading. I don't care which way it goes. As long as it moves in market structure, I always win. But I don't know where it's going or when it's going to do it because I can't predict the future and I haven't got a crystal ball. But logic would suggest the banks are massively overloaded on the Swiss franc. Therefore, the next positive movement we get on the US dollar and the Canadian dollar, we should get some power coming back out the Swiss and back into the US pairs. So this afternoon could be the catalyst on the housing starts. I'm not sure it will be, but could be. Tomorrow's unemployment claims more likely, but that has to come out as a negative number. So we have to have lower than 239, i.e. unemployment has to have come down, which means the unemployment rate figure will have come down. And the unemployment rate figure is one of the key fundamental drivers for price. Yeah. So if that comes down, that pressure is removed. Everything's going the right way. But it's just impossible to tell at the moment. So long right now. It's just a shame I couldn't get a second on this today. Would have been nice to get a second entry on this. But that reversal alert there was far too close. So that's only 15 pips. 3/4 of an ADR on this is somewhere in the region of 38. So too close for an entry. But yeah, nice ADR push and an ADR push as they pile out that Swiss franc will be all right. We will see. See what we see. DAX seems to have decided to do a little bit of a pullback. So hopefully we just pull back into propulsion and continue new leg down. But we'll see where that one goes today. We'll find out this afternoon when we come back and trade the rest of the US indices. Anybody got anything else they want to look at? Any other pairs? Anything else they want to discuss? Any questions about anything? Fire away if you do. All right, I see. The beaker. That's who we were talking about, yeah. So that screenshot you sent in Telegram about your spreads. Basically, you've got 2 digits after price, yeah? So what you've got there is 2.1, 1.6, and 1.2. So they're good spreads, yeah? Because you've got 2 digits after the price. Yeah, if you look at mine, I've only got 1 digit after the price on the DAX. Yeah, so mine is 16150.7. Yours was 16150.70. Yeah, so where my spread is showing at 11, yours would be showing at 110. So anything basically between a 200, below a 200. So that's for the DAX, that's about right. Anything below 200 is good. So that's a 2 pip spread. Yeah. You'll find that 99% will give you 1 to 1.5. The good one, the really good ones. But you will always have a variable spread. The only broker out there that gives a fixed spread is TD365. They're the only broker that gives a fixed spread on the DAX, which is fantastic. But they don't use MT4 terminals. You've got to trade manually. So, but that spread's fine. Nothing wrong with that. Darren, pound yen. So pound yen, this is a tricky one at the minute. So yen pairs are tricky anyway, because we're unsure as to whether or not we are starting a rollover into a yen bull market. There is potential for that to happen. The fact that we've just had negative news on the pound, if we are going to get that, then this is definitely obviously a short, but hard one to tell at the moment. You can't really trade this. It's sideways. So if you're going to do anything on it, it would be a long, but only trading it back up to ADR. But you are taking a long against something that's just had a fundamental news event saying that interest rates are probably going to come down, which will devalue the currency. So you're taking a long against a fundamental news event. So technically, it's a long. Fundamentally, it's a short. Leave it. It's not anything, is it? It's sideways. I'm very surprised the pound hasn't had more of a hit yet today. I was expecting London to smash it, but it's not. It's just not moving. Very weird. Calm before the storm, it seems, at the minute. Steve, support and resistance zones, do you normally draw them manually or not bother, as you can see them without drawing them in? I can see them just because I've been staring at charts for 15 years. I just see support resistance. But this indicator, the support resistance propulsion indicator, draws the key levels. The most important levels are your weeklies and your monthlies, because investors, if you look at everybody on the COT report, yeah, all these guys, the big players in the futures market that are positioned long or short on these instruments, they are all trading daily and weekly charts. Yeah. So they are trading the month and the quarterly moves. Yeah. So when we look at the chart where we have the 24 and 72 moving averages, the monthly and the quarterly moving averages, this is what the institutions are looking at. So when they are looking at price, they are looking to get into trends and get into ranges at key levels. Where price moved up into a monthly high and dropped back down is a key level. Yeah. Weekly levels are key, because you'll find if you look at a weekly chart, you have what are called control candles. So a control candle is basically a identifier, if you like, of a range. So there's a control candle there. So the high and the low of that candle, whenever you're in an area of indecision, you will use previous week's movement to stay in a range. So if they want to hold price in what they call balance, yeah, which is basically what we call a range, equilibrium, whatever you want to call it, they will look for areas where they can find liquidity, yeah, which is typically previous weekly highs and lows. So if you look at the most recent weekly highs and lows, we've got a big strong candle here. If they're going to move into equilibrium now, what they will do is they will sell the high of that week, and when we get down to the low of that week, they will buy the low of that week. Now, depending on whether or not there's a big strong buy or sell bias because of a news event or whatever, you might find that you break out of it into a trend. But if you're going to stay in equilibrium, it's the highs and the lows of the weeks which are the ones that get bought up. So you can see, you know, that week there, we pushed down outside of it and closed on it. And then we pushed up above that level and then closed down. Yeah. We pushed up above it, closed back inside it. Yeah. That week we pushed up and just about broke out of that high. So that started a little trend up. So you tend to find that these levels, when they get hit again and again and again, they tend to act as price push outside of them and then pull back. So a lot of, you know, these so-called smart money concept traders are looking for extensions outside of daily levels back into daily levels, outside of weekly levels back into weekly levels. they're all assuming that what's happening is there's a stop run. Considering retail makes up only 5% of the market, it's highly unlikely they're going to be hunting the stop of 5% of the market. They're probably looking for the bank's money, aren't they, rather than us? But that's what they call it. So there, we've got a high of the day. We pushed up outside of it. The reason that pushed back down again was because the guys that sold it there added to the orders. The guys that started this move back down from that week, yeah, when we tried to push up into it, pushed it back down again. Again, it doesn't hit to the pip. But they're rough areas on your chart. You can see where price has reacted in the past. When we get back to them, we tend to react again. And then when we break them, we again tend to react again. Yeah, because it's a level. As I said, the banks say, I'm going to buy at 27,540 and I'm going to sell at 29,290. They don't go, oh, we're going to go and find the high of that wick. Not the way it works. They're looking for, I want to sell up there and get out somewhere down there, and we're going to make roughly $25 million on the move. So it's just rough areas, and it's where it's moved before. So, you know, we pushed up. That's where we finished that month. Then we pushed back down. That's where we finished that month. We pushed up, pushed down, pushed up. We reacted at it. We pushed up, we reacted at it, reacted at it, reacted at it. We were pushed down. We got stuck at it. We pushed up, we reacted at it, we pushed away. Yeah. It's because this was an area of interest to the banks. There was a big battle that happened there, and the guys that were long were forced to take profit because they're overwhelmed by people wanting to sell it. When we get back to these levels, it's just what happens. Price reacts at them because everybody can see them. And when I say everybody, I mean the banks. The guys in the banks are not looking at charts, but they're looking at levels where we previously had action, liquidity zones, supply and demand, whatever you want to call it. It's just a price point. This is why I say, you know, when you do these courses, so you buy a course on supply and demand, you buy a course on support and resistance, you buy a course on market profile, yeah, you buy Nirav's course, which is the guy from Barclays who teaches you not to trade the useless candlestick patterns. He'll teach you to trade daily P shapes and B shapes and all that sort of thing. It's all just levels of previous price action. It's where there's been liquidity in the market. If I need to fill a load of orders, I need to find liquidity. If the banks have made liquidity moves at that point, we're going to get back to that point so we can fill our orders. When we filled our orders, we don't care. And it will go off wherever the hell it wants to go. So think of it like you got 10 banks that move this thing. There's only 10 institutions in the world with a big enough pot to actually paint candlesticks. They're all Ferraris in a line, yeah? If they're all going in the same direction, price is going up. If 5 of them are driving this way and 5 of them are driving the other way, we're not going to go anywhere. We're going to get an area of what they call balance. And then once we are out of that area of balance, if one of these cars falls and flips to the other side, we're going to try and do what's called a price discovery move to see if there is enough people down here that want to transact. If there isn't, we will pull back up into the previous area of balance. And then we will try a price discovery move out of that area. And then we will pull back into balance if we can't do it. And it's like an elastic band stretching out and in all the time, trying to find a level of equilibrium where these banks and institutions can do their job, fill orders for their customers. I come to them and say, I'm a massive institution. I need to do a massive transaction between pound and the US dollar. I need you to transfer 50 million of my pounds into 50 million US dollars, please. The banks don't give a monkeys where that gets executed. What they need to do is make sure that me as a customer gets my request filled. So they will go and find liquidity. If there's nobody willing, and I want to buy pound and sell US dollar, for example, to do it here, I will go and find somewhere they are. Fine, an order gets placed and I eat every single sell order until I've filled my order, and then I stop. Yeah. Along the way, the commercial desk is doing this. Along the way, the speculative desk will see the commercial desk executing large orders, and they will jump on board because they know that when the commercial desk executes the orders, the price will go up. So they will jump on board, the speculative traders, the ones that are going to make money sitting on the prop desks, and they will get off when the commercial desk finishes its orders. They will take that as profit. all of our savings we put into our bank at Barclays is all used as speculative money to make profit. Pensions, investments, savings. Yeah. You put all your money in a savings account. What do they do with it? They pop it all into a speculative move on the pound US dollar to give themselves a 3.5% return. They then pass on 0.25% of that to you and go, here's your interest. Oh, thank you very much. They've made 3.25% on that move. They gave you that much. This is how banks operate. They cannot fail to make money because they have money. And if I decide to dump $50 million long in this today, it's going up. I know it's going up. So if I tell all my mates sitting over there that want to make money, it's going up, what are they going to do? Buy it. And as they buy it with me, it goes up faster. Propulsion candles, propulsion moves. And that's the whole point of the propulsion gap indicator. Shows you where the bank's orders are. Balance, price discovery, add. Yeah. This is how the market works. This is what is going on under the hood. And you need to understand it if you've got any hope in hell of actually making money out of it. Because the one thing you can't do is time when it's going to do it. But you can see where it's been, where it's going to go. You just can't time when it's going to do it. And this is the whole purpose of position trading. I know at some point, if they do that, they have to do that. Because if they don't do that, the poor old bank can't make any money. So as we get in there and we thought they were going to do that and they didn't, and we do that and that and that, eventually they will. And we get out. Look at the Aussie New Zealand. How badly timed was that? Hideous trade. I made a 1% loss on that trade in 2 weeks. But look what happened. I knew it was coming because it has to. If they don't do that, they can't make money. Sell it, profit take, sell it, profit take, sell it, profit take, buy it, profit take, sell, profit take, buy, profit take, sell, profit take, sell, profit take, buy. What's coming next? Go back on your charts. Been doing it forever. Never stops. Ever. Never will. Because as long as the banks need to make money, market structure will be there. As long as market structure is there, as long as you don't use a stop loss, you can't fail to make money, can you? Simples, but not simples at the same time, is it? It's very, very, very hard. In the interest of motivation and inspiration, how much did you make long in the Dow yesterday? And what's your record day? 6.5 grand. Something like that. On futures, I also had that trade on. But I only made 1,000 because I got out bloody fast. Because I was not expecting the Dow to do that. Who would? Who would expect the Dow to do that? Yeah, days like this are few and far between. But they are always, always around the funny fortnight. Yeah, earnings fortnight. This is when you get these moves. So when you get into these big moves, if you manage to catch one of these big moves over the next few days, shut your eyes, go and walk the dog, go and spend some time with the missus downstairs watching telly, cook yourself food, make 3 cups of coffee, and don't come back to your machine until you've done all of that. Because if you watch this, you will exit it. That's exactly what I did yesterday on the futures market. I got in here on futures and I got out here. Yeah. With 1,000 something profit and left all that on the table. That trade that I got on here on futures was worth a lot more. But because I was watching it, I panicked and got out. It's the worst thing you can do. But you've got to be able to ride these runners. You've got to be able to ride them, which is why I always take 2 positions at every opening range breakout. One is a quick in out. Second one, break even runner. Because the runners are this is what makes you the money. The days you get those big ones, yeah, letting things run. It's the hardest possible thing to do in trading. Let your winners run. But if you don't do it, you're never going to get those 4, 5, 6, 7, 10% days And if you're only going to make 10 to 15% a month, and one of those is a 5% day, 6% day, that's how you make your money. You're not in control of when you get paid in this job. The banks are. Yeah, the banks have paid me 1% on the pound today. I didn't do that. Banks did it. Not, this is the thing. You've got to get out of mindset. Everybody's looking for the holy grail indicator, EA, strategy that consistently makes money in the market. But every single course you buy, every single indicator you buy, every single EA you buy is basically built on past price action, which has nothing to do with the future. Every indicator, mine included, lag. Yeah, this reversal alert is fantastic. I swear by it. I use it every day. You see me use it in there every single day. But it's told me that price has gone up. I know that. I can see it. But it signals me when price has gone up far enough that I know historically there's a good chance of a rally starting. Yeah, but it's telling me what's happened in the past. It's telling me that we've bounced off of an area of previous support. I know that. I can see it. Yeah. Doesn't tell me when I get in there whether it's going up or down. It tells me that we've had a W pattern reversal. What's the name of that guy from Barclays? Nirav. Oh yeah, Fit Thoughts just said it. Yeah, Nirav. Don't get me wrong. I've got nothing against Nirav. He sells courses, and apparently he used to work for Barclays. But what he teaches is getting in and out of the market based on areas that the price has reacted from before. Yeah. Go get a blank chart. You can do this yourself. Go out to the daily time frame, get a line, and stick it on. Everywhere you see price turn, stick a line. Yeah. So that area, that area, that area there, that area there, right? When the price gets down to these, buy it, right? If it carries on going, buy it again down there. Because if they've got all the way down there without doing that, they'll do it from there. If it goes up now and it bounces off of that level, sell it. If it doesn't do that, go up there and sell it there. This is what every single course you pay $99 to $2,000 teaches you. How to trade price movement. It just gives you a set of rules to try and figure out how to use to basically press a button that has a 50% chance of returning a profit or a loss. Every course, every indicator has the same odds, because when you press the button, it's either going to do that or that. And what's happened in the past has got nothing to do with what's going to happen in the future at all. If somebody teaches you that you've got a market profile on that day that looks like that, the day after it, the market profile looks like that, and the day after that, the market profile looks like that. If somebody teaches you to combine those three things together to make one big market profile that looks like that, and use that as your point of control or support and resistance line, you're going to pay £2,000 for someone to tell you that there's an area that you can see on the chart that price moved from in the past that it might move from again. What's the odds of, after doing all of that work, spending all that time building this thing together to give you that line, of that happening? Every course you ever buy teaches you to try and predict a random future event that no one can do because we can't time travel. Just use this. Use the indicator I've built. All it does is draw lines on the chart. It costs $50. Draws lines on the chart. Use this one. Tells you when there's a W pattern. You can see them, but this one paints them and alerts you. Yeah, everybody's at a different level of trading. Everybody can see things differently when they look at a chart. Some people need everything explained in detail because they're new in their trading journey. That's what everything I build does. You don't need any of it at the end of the day. If you press the buy button or the sell button right now, your odds are 50-50. You just need a way to get into the market. Will the MRA of EA Will the MRA EA affected when I move target manually after the EA set? No. No. Any stories about particularly terrible squeezes you remember? Well, what's wrong with that one? That was particularly terrible. That lasted 23 days. I've been through loads of them. US dollar Swiss is probably the worst squeeze I've been in. Don't know. US dollar Swiss was years ago, though. Well, last year, actually. Year before last. Christmas. I mean, that was about the same. All the same squeezes. They all unravel. Squeezes always unravel. It's just how much money do you lose during the squeeze? That's the question. And how much drawdown do you go into? Evans runners similar to no nonsense Forex. Yeah, I get no nonsense Forex. You know, everything you see on YouTube is all just stuff. It's all the same stuff. There's nobody on this planet that can teach you anything different to me. I teach it all for free. No nonsense Forex puts it all out there for free. Yeah, hundreds of people charge for courses to teach you what I'm teaching you here, right? Flip a coin, you've got exactly the same. I've got this new idea for a intro video, basically, and it's going to start something along the lines of, you're just about to listen to a bloke sitting in a spare bedroom in his house in England tell you which way the market's going to go in the future. Do you think you should be here? I'm unqualified. I have never worked in the banking sector, but for 15 years, I've been watching this thing go up and down, and I've spent hundreds of thousands of hours looking at this, and I can't figure it out. So I came to the conclusion that I'm going to do what the banks do and press the button and wait for the price to go into a positive territory and then press the close button. The only way I can do that is by removing my stop loss. As soon as I did that, I became profitable. Yeah, I'm just a bloke sitting in a room. But everybody else out there is going to try and sell you something that is going to be a secret sauce, a holy grail. I used to work at Barclays. Do you know what we didn't use? Useless retail candlesticks. But I used these blocks inside of candlesticks so I could see inside the chart. Same thing. Buy, sell. It either goes up or it goes down. Deal with it. Just don't risk your mortgage every time you press a button. Don't risk 1%. That's nuts. Everybody does that. That's nuts. If you're going to risk 1%, just make sure that you get out fast if it's going the wrong way. That's the only rule. Don't forget his DOM software he invented. Is that Nirav? I haven't done all of Nirav's stuff. Honestly, if he's, yeah, I mean, again, it's the same as Greg Secker, isn't it? Right? He educates people how to trade. Nothing wrong with that. I've no problem with retail education. You need to learn how this all works. He sells chart software and he runs a brokerage. So he charges for a course, then sells you his software, then makes you trade through his brokerage. That's 3 income streams. Teaching you how to do something. Does he do that? Or does he teach you how to do it and sell you the ability to be able to do it? Does he sell you the dream or does he prove to you he can do it? I don't know. I've never done his course. But there's a lot of people out there that are willing to give you a lot of education with no proof whatsoever that they've ever made any money. I come in here every single day and I show you how crap I am at trading. I've made 15.97% this month, getting it wrong. You know, it's just nuts. The whole industry's nuts. Just, you know, I've kind of gone on a crusade in the last couple of years against these people on YouTube. I constantly getting bombarded on Facebook and YouTube. People selling me the same thing over and over again. I've even done a video on it on the website. Just to try and educate people that everything you're doing is just, it's not on the website actually, I don't think. Oh yeah, it is, yeah. It's just the same stuff. boxed up in something different. They sell you a white box, they repackage it in a black box, and they sell it to you again. Then they make the box blue, and they sell it again. Then they make the box red, and they sell it again. At the end of the day, you're left with 4 boxes that tell you basically to press the buy and sell button. There's a 50-50 chance of it going up or down. No one else can tell you anything different, because that is the only 3 things we know: is it goes up, and it goes down, it moves through time. Yeah, the banks don't even know. When they press the button in the bank and they go 25 million long, they've got no idea whether that candle's going to end there or there. Because if they do that and HSBC hit the button with 50 million, it's going down. That 25 million they just pumped in, they're going to go into drawdown on it. What can they do? Pump it back up again. They can't lose. We can. But the banks have no idea when they press those buttons whether it's going up and down. We demonstrated this yesterday, didn't we? With the initial cash balance on the Dow. Yeah, we looked at the initial cash balance on the Dow yesterday going. And someone said, I think it was Fagini or someone said, why did that candle go down like that and then pop all the way back up there? Well, banks and institutions entered a ton of sell orders in the market. And then other banks and institutions entered a ton of buy orders in the market. The banks that hit the button to go short had orders to execute for their clients short. The guys that hit the button long had orders to execute long. That's what happened. Nothing else. There's nothing more complicated going on there than maths. I want to buy 1 Tesla. I need somebody to sell 1 Tesla for that order to get executed. If the guy is willing to transact at the price I've asked for, we transact. If the guy wants to transact at the price slightly higher, either I have to step up to complete the order or he has to step down to complete the order. A tick. That is a ton of ticks landing at once by the banks. But none of the banks care which way that goes on that candlestick, because it's not speculative trading. It's just order execution. And that's exactly what happens in the Forex market. So if they can't predict the future, how the hell do you expect anybody to sell you a course that can predict the future? It's not going to happen, ever. Because no one can see into the future. It's just nuts. But they'll sell you software to hopefully educate you on how to try and predict the future. That's all it is, isn't it? He just seems to have the chart. He has the volume up the side, which is easier to see. Nothing special. All that is market, what's called market volume profile. Just volume profile. So on the right-hand side, you'll see that. Yeah. What that means is there was more orders transacted there than there. There's more orders transacted there than there. That's where the most orders were transacted today. Yeah. Which is called the point of control. And then there was more orders transacted there than there. Yeah. What's that? A line. What's that? A line. What's that? A line. What else could you call those? Support, resistance, maybe? Doesn't matter how you paint it. It's the same bloody thing. It's a load of orders executed in one place by banks and institutions. When we get back to those areas, likelihood is it will roll out of them. The same stuff. It's just, instead of putting lines on the chart, he puts something over there and teaches you how to read that. I can read that. It's just on here. Oh, I'm old. I've been around in this place far too long. It just seems to have... Oh, yeah, just answer that one. Stupid question. How can I change the default chart settings when I open a new chart? It's a line chart with grills. I don't want it. So right-click, template, save template, call it default, and save. And every time you open a chart, that will be the default. Yeah, so there's my default template, which has nothing on it. That's it. It's just save a template and call it default. And every time you open a new chart, that is the default chart. Morning, Brian. Sorry, we're talking about NIRAV. I'm miles behind on the chat now. I've been waffling too long. Tell us you've been in loads of painful squeezes. It isn't the selling point you think it is. No, I know. I'm not trying to sell you anything, though. I'm telling you how it is. As you know, Diamond, because you've been in there with me. You've been around far too long with me. You're probably the longest member I see coming up in chat, in Telegram and in here, which is great because it means you're still here, you're making money, which is the end goal, basically. When you hold a trade for weeks, aren't your swap fees enormous? Yes. Not enormous. They're big, but not enormous. They're, you know, It's a cost of doing business. Every business has a cost. Your costs are commissions, spreads, and swaps. Those are your costs of doing business. The longer you hold a product for, think of it like an orange. If you're a fruit farmer, you pick your oranges. The longer they sit there, the more they deteriorate, the less money you're going to get for them. The longer you hold a trade, the more it's going to cost you in swaps. But do you have control over that? No. Just the cost of doing business. So if your average price is here, and when you get to that line, it's not quite in profit because swaps let it run a little bit further. The likelihood is when you get out, and you will see this on all my trades, Aussie New Zealand is another good example, prime example. Yeah. Virtually every trader on the planet is out too soon because we like profit. That's our job. When this got into a nice amount of profit there, I closed the whole position out. That profit there was 9 point something percent. I can't remember what it was, but it was 9 point something percent on the entire position. The drawdown was all these lines going up are drawdown control. These are partial scale out losses. Those all equated to something like 10 point something percent. So the overall net was -1%. I got out there with 9%. Can you imagine what my P&L would have been if I'd have known and I could see into the future that this was going to go down to there and it wasn't going to be a double bottom bounce, which is what I was probably thinking it was going to be, which is why I exited. Always out too soon. So if you get back to break even and your swaps require you to get that far beyond break even, do it. You won't know where you need price to go until you are ready to get out of a trade. So you just have to get in basically and get out when you are comfortable, but you know where price is going. Yeah, this is a propulsion gap. We know that propulsion gaps get filled. That's the purpose of having them on the chart. There's a high probability it's going to hit that one. I'm getting out there. I could get out right now in profit. If it gets down to 150 ADR today and bounces somewhere around that area, which is a previous resistance turned support, I will probably close the lot out. My TPs are there. Tomorrow, I can pretty much guarantee you will be there or there. But I'm not going to wait. If it gets down to here and bounces off of 150 ADR, I'm closing it all. I'm not going to hold on because that's where my TP is. So you're always going to be out early. You will find there's always a little bit extra in your trades all the time. And that's what pays for your swaps and spreads. You look at your P&L and you go, do I want to take that 300? Do I need it? Do I need that 300, that 300, that 300? Yeah, there's $1,200 there on the table, which is 1.2%. So I could take today up to 2 point something percent right now. Do I want to? Do I need to? Probably not, because of what's going on with the pound at the moment. I could do. These decisions, whether you bank that, and that, will add potentially another, what, 8, 1, 2. I could bank now, right now, I could just bank 4%, walk away with a 5% day. My DD will go back up to 8%. These are decisions as position traders you've got to make on your own because it's your account, it's your money, and it's your decision. What's your confidence level? At the moment, my confidence level in the pound dropping is high because of what's happened this morning. If this move was happened and it wasn't news, I'd be thinking at ADR, I'm going to shut this because there's no reason for this to go any further. We've hit our average daily range. We have got a potential support resistance coming up, but it might not get there. This might be a higher low market structure bounce. It could come down and double bottom. Again, I can't see into the future. I don't know. So you just take the money when you get the money. And this is what I'm saying about the whole way the banks work. They don't go 25 million long. We've dropped. Oh, okay. Take a 25 million loss. Can you imagine walking up to your boss in the pits and going, not in the pits, they're not in the pits anymore, but walking up to your boss and going, just had a $25 million loss. His face would be livid, wouldn't it? In the grand schemes of the billions you're trading with, though, it's probably not a massive loss, is it? But they don't need to do that because they can push the price back up again. We can't. We can't time the market. And that's the one thing the bootcamp teaches you how to get over. Timing. The only reason your timing is wrong is because of a stop loss order. Remove the stop loss order, your timing is not wrong. It's just not exactly right in the grand scheme of the swing. So we move our price to a different level. Yeah, pound CAD. I entered short there. That didn't work. So I entered short there and moved my price to there. That didn't work. So I entered short there and moved my price to there. That didn't work. So I entered short there and moved my price up to something like that. Right now, my price is here because I've got that position, and that position on. Yeah. So rather than be wrong, why not just move the price? Doesn't that make more sense? Rather than just taking a 1% loss, 1% loss, 1% loss, 1% loss and going, scrap this. This system doesn't work. I'll try the next one with a 1% loss, 1% loss, 1% loss. Well, I'll scrap this. I'll try the next system and do that for the rest of your life. Why not just move the price to a level which is better and then just wait for the market to move? Makes sense. Euro pound 125 of its weekly. So pound is on the march now. Euro still marching up. I've taken a short on that euro pound. So we've had a reverse alert, which has been invalidated this morning. So I am short one on that, but very extended. Big move today. I think you are so true, but sadly it's part of the process. Can't remember what I was talking about. Spam on Telegram. Oh my God. Bye-bye. Shouldn't be able to post links. There's something wrong with my group bot. It's letting files and links through for some reason. You watch all the spammers suddenly go and attack it now. In a situation where you become really famous and position trading becomes the status quo for retail traders, would the banks not start to push people into crazy long squeezes? I don't know. Again, I used to think like that because people told me that. So when I started trading, well, I started looking into BTMM, Beat the Market Maker strategies with Steve Malro. Part of the sales pitch was we only let a certain number of people in because we don't want the banks to know what we're doing. Yeah. And I thought at the time, got a good point there. When you think about the money that goes through retail trading compared to the banks, you realize how ridiculous that is. If I had 1,000 people in here position trading right now, we would make up 0.0000001% of all movement in this market. If that, if we're lucky, right? And think about the banks, right? What they do is they squeeze the market, yeah, worldwide. That's what they do. That's their job, which is why it's called a squeeze. So they squeeze the market until there's no liquidity left. The reason a squeeze happens is because the banks need to execute orders and they need people on the other side. So if they can't find orders there, they will push. They'll find them, they'll push, they'll find them, they'll push, they'll find them, and they'll keep doing that until they don't have to do it anymore. Then they take profit. If everybody started doing this with no stop loss, people would still go bankrupt. People would still blow accounts. People would still be trading with stop losses. And it just wouldn't bat an eyelid. This is a $7 trillion a day market. $7 trillion. If all of you out there right now were trading with 100 grand and there's 1,000 of you, we're not even going to be able to move a candle. Just not going to happen. And anyway, I'm not going to become that famous. There's 75 people in here. I've been doing this for 4.5 years now. I'd be famous by now, surely. Well, I don't know, maybe. Everyone's got to get famous at some point. I don't want to be famous. Anyway, got a life as well, you know. Michael, I spent an hour on Neerab's free seminar, and that's an hour I will never get back. Yeah. It's the same as Greg Secker. You know, they all do these 3-hour seminars where they sell you an idea that you've not heard before. And that's what it's all about. What you're looking for as traders and what we've all been looking for all our life is the holy grail system or strategy that makes money in the market. there isn't one because everything fails. The way that they pitch things is in a way you've not heard. So this is why now we're going to get an influx of AI-based strategies or AI-based indicators or AI-based EAs because we haven't heard about it. So they're going to repackage everything we know now into something with the word AI on it, and you're going to buy it again. But it's still not going to be able to predict the future. The computers cannot predict the future. There's a seminar coming up. Right? Is it Brian sent it to me or Steve sent it to me the other day? I can't remember who it was, or Michael, someone. Who was it sent me that the other day? There's a seminar coming up on AI. And there's a guy in the seminar, find it now, who sells a course and sells software, doing a speech. Do you think he's there to give his opinion on AI, or do you think he's there to sell his course? It's a seminar created by a broker, 8cap. Crap. It was I, Steve, yeah. I can't find it now for some reason. You've disappeared. Oh, there it is. Trader Fest. This thing. Right? This bloke is the one I'm talking about. Anybody know him? A1 Trading. Sells courses and sells software. Yeah. He's going to go and give his opinion on AI. Trader Nick. Super simple way to auto trade from TradingView. Yeah. Buy my EA on TradingView, and it's a super simple way to auto trade. He's not there to talk about AI. AI is not doing anything. It's just another reason to get a load of people in a room and sell them crap. Stock trading systems for beginners with the help of ChatGPT. Buy low, sell high. There you go. When there's a line on the chart, do that. Some of them will work. And if the ones that work are bigger than the ones that don't work, tick. 6 AI stocks that could double this year. That one probably, yeah. But all he's doing is saying, these are the market leaders in artificial intelligence. If we think it's going to explode the way it does, you want to buy their stocks. That's logical, isn't it? It doesn't take a rocket scientist to know that the new big thing is going to be AI. Therefore, any company invested in AI has got half a chance of having a stock rally. You could make a lot of money on them. How AI will revolutionize visual trading by the market sniper. It's sort of like selling you. They're just going to sell you the same stuff. It's just got the word AI in it now. Let's buy that. I've seen so many variations of everything come past. It's just unbelievable. If you're a position trader and not worried about what price moving the wrong way, how do I know what's your risk? How do you know what your risk is? So you basically reduce your position down into multiple small parts. Closed out a futures position. And it's painted the wrong line color, which annoyed me. It didn't annoy me, it worried me because I haven't gone short, and for some reason that's a short. So basically, what I do is I use ADR. So I risk 0.25% of my account on half an ADR of movement. So let's look at something that hasn't hit ADR today. That'll do, Euro odd. So basically, if I was to go short here, yeah, Eurozone CPI has just come out, 0.3 on a forecast 0.3. That's what I was saying earlier. Remember, this will come out. This is why this is not a market moving event, because we know what this is going to be, because it's basically Germany and France, which we've already had. So it's always going to come out roughly what we were expecting, so it doesn't have any impact on the market. So basically all you do is you risk 0.5% or 0.25% or whatever based on half of a movement. So go short, yeah, put your stop loss there and calculate your lot size based on 0.25% of your account or 0.1 or whatever you want your risk to be, but small, tiny risk based on half of an average days of movement. So it's got to do quite a lot to get to 0.25% of drawdown. Yeah. And then place that trade and just remove the stop loss. And then if price moves there, I'm 0.25% in drawdown. I can add a second position, move my price up there, my average. Yeah. And now if it moves there, I am now 0.5% in drawdown on my first position, 0.25% in drawdown on my second position, giving me a total exposure of 0.75. So by the time you get to roughly 4 to 5 positions, you will be in somewhere in the region most of the time of 2 to 3% of drawdown, maybe less depending on how the market's moved. Not 4 to 5%, 4 to 5 positions. At that point, the market, you've got in already when it's extended. So if it's got to 4 to 5 positions ahead against you, that is really extended, like more extended than, way more extended than normal. And the market hasn't done a profit take move. So therefore, the odds of it doing a profit take move from there are way higher, which is where we can enact aggressive drawdown control to get out fast. Yeah, CAD Swiss, prime example at the moment. We've got 1, 2, 3, 4, 5, 6 aggressive drawdown control position. Yeah, my average is there. If this thing goes up by less than 1 ADR today, which it does 58% of the time, stays within ADR. So there's a 42% chance today of this thing exceeding ADR, which puts me into profit on that position, which means I can get out with no loss whatsoever, or get out with a profit. But only reason I can survive weeks of that is because I'm not using 1% risk per trade. Because I know that if I do that, this is going to cost me an absolute fortune. This, what's the ADR move on this? ADR is 47. This has moved 165. So that one position there would be somewhere in the region of 4% in drawdown. On that one trade would be 4% in drawdown there. Can't have that. You can't survive that. And we scale out along the way. So we use the profits we make on a daily basis to pay off the ones that are wrong and take partial losses on them. This is all explained in the bootcamp. Links going on the bottom there all the time. It's all explained in the bootcamp exactly how to do it. But it's basically what the banks are doing. They're scaling in and out of swings and moves. Yeah, they're not trying to go, this looks like the bottom, loss. This looks like the bottom, loss. This looks like the bottom, loss. Think about the people yesterday on the Dow. These poor people yesterday on the Dow that were trying to catch the high, shorting it over and over and over again, saying this has got to come down. This will do what the hell it likes because it's not anything you can control. If I'd have got in on this as a position trade yesterday, I'm still in it. Which is why I don't position trade indices because they are trend monsters. Look at this S&P 500 in a normal bull market. Do you want to be position trading that and trying to catch that short? No. Yeah. This is a trending machine. It's designed to trend. It's designed to manufacture money unless it's in a bear volatile market, which we are at the minute. Well, we're not actually. We're going back into bull calm, probably. So there's certain markets you can't, well, you shouldn't do it in. I mean, you can, but it's hard work. And Diamond has said very eloquently, embrace the squeeze. Or try and figure out a way to laser target an entry and get the high risk reward you need to actually make profit by doing that, which is what everybody's been trying to do forever and why 90% of people lose 90% of their accounts in 90 days. Because the only way you can make money is to predict the future. And if you can't predict the future, you can't make money. Accurately, I should say. Failed traders tend to sell courses or set up prop firms, yeah. Or both. There's one guy out there at the moment, I can't remember his name, which company he works for, but he is not only got a course he sells and a signal service and a private chat group, but he also now has a prop firm. Do you think he makes money trading or do you think he makes money out of everybody that's trying to learn to trade? I'm slightly hypocritical in the fact that I design and develop indicators and EAs. But that's not my income. I'd love it to be my income because I wouldn't have to trade, because it's a lot harder work trading than it is selling stuff, but I can't find enough people to buy them. One day, maybe, when I'm rich and famous. The market squeezes into the blender. Is Euro US dollar killing you today, Brian? Yeah. Again, another sideways day. This is day 4 in the blender. Look. Blended. 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 Being blended. You can't be famous because you're talking truth. Yeah. Exactly right, Burke. No one wants to hear the truth. That's why I have 70 people in the room. But then again, the reason I do what I do is because I met somebody that told me the truth. And he said to me to pass it on. And that's exactly what I'm doing. I became mentored by someone who'd been doing this. He was 60 years old, had been doing this virtually all of his life. Very similar to the people that you will see in the pits that used to work in the Chicago Mercantile pits. They know the truth about this job. They walk into the pits and they would literally just listen to the noise and go, I'll buy that. Absolutely no other reason. All they heard was something they thought sounded like they should buy it. Absolutely no clue which way it's going. That makes sense. But then since retail makes up 5% of the volume and the banks make up 95%, why do people talk about banks coming for retail traders' money? I don't know. Because they're trying to sell you a course, maybe. Surely they're going after each other's money. Yes. Correct, Daisy. Think about the person that invented smart money concepts, or thinks they invented smart money concepts, or the people that are trading smart money concepts, right? How many of them are selling courses? How many of them are trading every day? Why do you know about smart money concepts? Because of YouTube. If I had 1 million views on my videos on YouTube, I would be paying my mortgage off. Let's come up with something we can tell people about and make something up about it. Yeah, I don't know. I don't know whether it's real or not. What I do know is some of the facts that some people say about smart money concepts. I know people in banks that have disproven them because they've used terminology that I've talked that they say the banks use, and I've talked to people working in the banks. They've never heard of it. So, but they sell a lot of courses selling you this magic thing that banks use, which I've never heard of, or neither has anybody in the banks. These 80 watching are the smart ones. Yes, there we go. There's the smart money traders. 1,000 watching Lambo squads will be jumping on a new system next month. Exactly. Grand scheme of things, we make up such a small volume in the market. Stop hunting stuff has got to be bull. Yeah, it is. It does. Stop hunts do happen. The concept of the stop run is legitimate. Yeah, but it's not for the reasons that people sell. Yeah, so people in smart money that teach smart money concepts told you to go short on that candle. Yeah, because that was the high. That is where all the stops are. So what they did was they stole the stops and they run away with it. Right? What's actually happening there is they needed to fill an order. There was liquidity at that level. They needed to complete the order book they were given for the Euro US dollar in this case that day. The order's complete. They've done it. What happens next has nothing to do with that candlestick popping up above the highs. What happens when that candlestick happens is a load of people go short, and if there's not enough people buying it and the sellers overpower them, it drops. That's what happens. It's mechanics. It's just numbers in a pot. At the end of the day, painting this thing, which on a different time frame will look different to every other time frame. Yeah. So which candlestick do you do smart money concepts on? 5 minute, the 1 minute, the 1 hour, the daily? Because you're going to get completely different results. But if that concept's the same, how can it be true on each time frame? Swiss yen ADR. Big strong push. This is yen weakness we're seeing at the moment. That CAD yen I need to get out of in a minute. But yeah, I don't know. I don't know if it's true or not. What, you know, does it matter? Again, it's just another way of teaching you how to get into the market, isn't it? Every time you take that smart money concept short, which you just had one here, look, right? There's a high, there's a stop run, and there's a completely wrong stopped out trade. Oh, yeah, but this one didn't work because some excuse will come up. It didn't work because the market went higher. That's why it didn't work. That's it. Simple as that. But yeah, the banks are in. Again, think about the banks. My name's Lee. I sit on the commercial desk. I come into my office at 8:30 in the morning. I look down and I go, I've got to execute X, Y, Z in euros. I've got to do US dollars. We've got a ton of yen orders over here. We've got to execute. Okay, brilliant. Bob, HSBC, I got a load of yen longs. You got any shorts? Yeah, brilliant. How much you got? 2.5 million. Excellent. You can have these 2.5 million. That's exactly what used to happen in the pits. They go long Tesla. Someone over the other side goes short Tesla. Agree on a price. Yeah, that's all the banks are doing. At some point, that bank is going to go, HSBC got any? No. Citibank got any? No. Goldman got any? No. Shit. Right, I need to go up further then. So they'll push price up and go, right, Goldman, you got any at that level? Yes, brilliant. Execute the order. This is what you're seeing. Banks execution. That's all it is. The reason they pop up above that level is because there's no one willing to sell to them at that level, so they have to go up higher. If they've still got more to do, a la today, they'll do it. Sometimes you will observe that happening. Other times, you will observe that happening. I would say if you went back on your charts, you'll probably find it's around about 50% of the time. It will either go down or up. Am I speaking sense today? Or am I super complicating things? Without stop losses, how do you come out of a situation wherein you don't get any time to do aggressive drawdown control? Why would you not get any time to do aggressive drawdown control? Due to an unforeseen catastrophic event that totally decimates the market. Well, yeah, you'll blow your account if that was to ever happen. But you'll blow your account if you had a stop loss, wouldn't you? Yeah, if you had a stop loss during the Swiss franc cap removal, you blew your account. Yeah. If you went long there and you put stop there, you got filled down here and you blew your account. Yeah, so if you do get a black swan, you're going to blow your account anyway. There's nothing you can do about it. You won't get your stop on it. Look at this today. Look at the pound CAD today, right? Look, that was my stop loss there. That was where price traded. Why did I get stopped out there? Because they spread the market. You will get your order executed at the level the broker decides it wants to execute your order. If the broker is anticipating a short move, they will stop out your order so that they don't have to pay you on that, because 90% of brokers are taking the opposite side of your trade. Therefore, if you go down there and make a ton of money, they lose. So if they stop you out there, they lose less. Yeah. If the market is going to collapse catastrophically, you're going to lose. No one said this wasn't risky. That's why they call it risk, whether you use a stop loss or not. Right? And this is why we use ADR. And this is exactly why we use ADR. On average, price moves 58% of the time within ADR, within its average daily range. This level here, 225% of its average daily range, it exceeds it 2% of the year. So just because price spends most of its time there doesn't mean it can't get there. It will do sometimes. If you risk 0.25% of your account going long there and it moves down to there today, that is a catastrophic drop. What's the worst case scenario? you're in right now. 1.25% of drawdown. If you're worried about it, close it. If it moves down 4 ADR in one day, which is probably the most I've ever seen, which is a yen intervention. Not talking about black swan events, but an intervention in the market by the Japanese. You're going to get a move like this. So that move there is 549 pips. The average daily range on this is 149 pips. So that's roughly 4 ADR in one day. Happened there, and it happened there. Intervention. This is probably the biggest move you will ever see in the FX market in modern times, is a Japanese intervention. They're the only country that does it. No one else does. Other than that, we don't get black swans. Not anymore, because it's all computerized now. Unless something happens, like a war breaks out, World War III breaks out, yes, we're going to have all sorts of things going wrong. But you just be pressing that button as fast as you possibly can. Get out of everything. Nothing's going to go your way. That would have cost you somewhere around about 2%. Close it. What have you lost? 2%. That's normally risk on 2 trades, isn't it, if you're risking 1%? But the difference between position trading and stop loss trading is I don't lose. This is not a loss. This is 5.4% of drawdown. This is unrealized profit. This could turn into 5% plus this afternoon and become realized profit. This is realized. This is unrealized. So the worst case scenario right now, I can close everything on my books, walk away with a 5% loss and take 10% profit this month only. Take 10% profit this month. Bad. Not very good, is it? Making 10% a month. Terrible, considering 95% of traders lose money. Just shut it. Look at this. So the worst trade I have at the moment is 1.5% in drawdown on the CAD Swiss, and I've got 8 positions on it. And it's in 1.5% of drawdown. Do you think the banks give you a portfolio of 100 million and then say to you, go and risk 1% per trade on half an ADR's movement? You'd be immediately fired and out the door. You scale into a move, you scale out of a move, you pick a position. What is the broker scorecard telling us we need to do today? What is the analyst's opinion on the CAD yen? Buy it. Why? Because the fundamentals are pointing to CAD strength coming through and yen weakness. Brilliant. Which way do we need to go on the orders? Well, the market's currently positioned long on it. Where's all the liquidity? There isn't any more higher or lower than we are at the moment. Okay, so we'll just start buying the CAD yen. This is what the bankers get every day. They get a report telling them what all the fundamentals are pointing to as the market movement over the next 4 to 12 weeks. We can't do that. We can't predict that because we are not in a bank. That's the way it works. So you have to use your head, basically. And if you think it's getting too deep, get out. But don't get in with an order that says, get me out and lose 1% of my account. Every time you take a trade, you're saying, if I'm wrong, lose me 1%. That's ridiculous. Crazy thing to do. Euro yen ADR. So big strong move on the euro today. Again, this euro is weak at the moment. So US dollar yen can bank 0.5%. New Zealand yen I can bank 0.2%. CAD yen I can bank 0.4%. That's all my yen exposure. But I started this trade here last week, and I've taken a loss on it of 1.2%. So I'm still in the hole on it by roughly 0.8%. But look at this move. If this goes all the way back up to there, I would never hold it up to there because I haven't got the balls. But if it did go all the way back up to there and we just put a V-shaped recovery in, which we've seen many, many times in the past, V-shaped recoveries are very common. There's one. You know, this is obviously a bigger scale one. If that happens, that's an absolute fortune, isn't it? You can hold it. But I haven't taken on these 4 positions. I haven't taken 4% loss trying to long the thing. I've taken a 1.3% loss and I'm in the trade with the possibility of making a load of cash. Big difference. Lockwood, have a feeling he's like that. Lockwood, I don't know who that is. Not heard of him. Be the first trans trader. You will be famous. Yeah, don't think the wife would like that very much. But yeah, I would be, wouldn't I? I get enough crap on Telegram and YouTube and Facebook without being trans. I'd probably get twice as much crap then, wouldn't I? From the people that think this is the no stop loss gang. Or the people losing money over and over again, thinking we're crazy not using a stop loss. When they're sitting there losing money over and over again, going, you're stupid. No, you're stupid. It's like I need to hold up one of those placards, isn't it? Stop losses are bad. Prove me wrong. Sit there with that cup of coffee. I was just thinking about how it doesn't make sense that the 95% volume is constantly coming after the 5% and creating traps for retail. Yeah. You know, it's the traps. It's the whole thing. Steve Malrow was very much like that. BTMM, his course was very much, you know, he had that saying, was it don't trade until they've hit the stops. And it was looking for traps, you know, trap plays. There were setups about traps. Traders do get trapped. That is true. That is a thing. You know, you do get trapped. I'm trapped at the moment on the US dollar yen. I've been trapped on it for a week. But the fact that traders are trapped in a position doesn't mean it's going to be the turning point. It's all about, all courses and all systems are about trying to find the top or the bottom, because your job is to make profit. So if you're going to put an order in the market to make a loss, you have to find the bottom or the top in order to have a higher risk reward to make a profit. So your never-ending goal is to time an untimable thing, because if you could time it, you'd do it. We can't, because we don't know when it's going to turn. Every time we get a reversal alert in the market, that could be the end. And again, people constantly slate me. Oh, that repaints. Yeah, it does repaint, because this is market structure currently, as I define it. If a new low goes in, market structure has changed. So I want to paint the new market structure in. It's painting market structure. It's giving you an alert. And if that alert disappears, it's because you were wrong. Does it mean you should take a loss because you're wrong on that particular entry? Or does it mean you got the timing of that one wrong, so it's probably going to be further down? Yeah. All the time, constantly getting slated about, you know, it's the bane of my life. But when you can't explain to people the concepts of the markets because they're not interested in learning. They're interested in an indicator that gives them an 80% strike rate, makes them a millionaire. They can buy a Lamborghini and sit around a pool with a load of beautiful women. That's what traders do. Every YouTube video you see has them doing it. So obviously it's possible. There's got to be an indicator out there somewhere, isn't there? So in 15 years, when you're lying on your deathbed, you'll be going, I never found it. You won't ever find it because you can't predict the future. I can't predict the future. This doesn't predict the future. This just tells you when there's been a shift in structure and the buyers are taking control. It doesn't tell you anything more than that. I can see that because candles went up. Bare naked charts. You know, all the people that trade bare naked charts, fantastic. Best thing you can possibly do. Yeah. The reverse alert's there for all of you that don't know. I can see it because I've been doing this for 15 years. If you can't see it, there's an indicator I've got that paints it. That's all it does. Just shows you what I can see. Yeah. And I can see where it's going as well. Yeah. I can see that it's aiming for that area, that propulsion gap. I can see that. But I can see it because I can see it. If you can't see it, you need an indicator. And this is where indicators are great. Propulsion gap is there. Yeah, indicators are great for identifying things if you can't see them on charts, but they don't make you any better than me or any more profitable than me. They just make you see things that I can see. That's all it does. And that's all courses do. They teach you things that other people know. Doesn't make you a good trader. I can't make anybody a good trader. Yeah, I can see where the gaps are. I can see where the support is and the resistance is. That's all. But I don't know when it's going to get there or if it's ever going to get there, because it's not down to me, is it? It's down to the market. It takes much more sense that they're after each other's money. Yeah, exactly. They are. They're after each other. Their job, as I say, is to execute orders. It's your job. You're a bank. Your customers say to you, I need this exchange done. If you go, nah, don't fancy it, what are they going to do? Go to another bank. You're going to make X% commission on that exchange. Your job is to make that exchange happen. If you can't find the money there to make the exchange, you damn well go and find that money. And if that means pushing the market up by 0.5% today or half an ADR, do it, because that customer is going to pay us $45,000 to execute this exchange for them. So just go and get the business done. That's what's happening. Everybody's trying to find some kind of logic in chaos that doesn't exist. We know what they do because we can see it in the past, but we don't know how far they will go or when they will do it. Timing. Can't time the market. Just imagine if portfolio managers used stocks. Retirement accounts wouldn't exist. We wouldn't have pensions. We wouldn't have a market. We wouldn't have banks. Because do you think, right, the people sitting in the banks on these dealing desks are any more intelligent than you or I? They've come out of university with a degree, or they haven't had a degree and their dad works in the bank and they've managed to get themselves in somehow. They're sitting at a desk. They get given $25 million worth of portfolio and they are told to come back with $50 million in 7 months' time. That's their job, right? They cannot do this better than you. If they were to see a candlestick chart or a line chart or a market profile chart or anything else, when they press that button, the odds are the same, right? But they have guys sitting either side of them that also have buttons, big buttons. Yeah. Why do you think the banks are constantly getting fined for insider trading over and over and over again? Telegram groups. There's bankers' Telegram groups where the bankers all talk to each other and tell each other when they're going to execute orders. It's against the law. It's against regulation. They will get fined a fortune if they're caught. Do they care? No, because they make way more than they ever get fined. Don't do it. All right. New group. Here's the group, boys. Don't do it. Here's a group, boys. Because if they don't know when they're all going to go in the same way, how can they ever know if the market's going to go up enough? How are they going to buy the next Ferrari? It happens. It's well documented. It's all rigged. Your broker makes money every time you press that button. When you press the buy and sell button, he makes a commission, a spread, and a swap. Yeah. What do courses teach you? Scalping on 1 minute and 5 minute timeframes. Why? Because you press the button more. Trade H1 and H4, you won't press the button as much. Brokers don't make as much money. They don't like you. Truth. Right, I've got to go. I've got stuff to do. It's 10:30. DAX this morning is a no-go. Well, it's in profit at the moment. So I'm short. One stop out. If we get a continuation short, fine. If not, I'll be closing out somewhere around here. I don't know where, but hasn't gone anywhere today. AZ, wait, so just to clarify, do banks purely execute trades to execute orders for clients, or do they have Forex trading floors where they make money? No, they make money Forex trading floors as well. There's three main desks. You've got your commercial desk, your investment desk, and your speculative desk. Those are they're all called different things in different banks, but at the end of the day, there's one desk which is market maker desk, if you like. Their job is to make a market, which is basically to provide liquidity into the market. Like I just said, HSBC, it's Barclays here. I've got 25 million yen to execute long. Yeah, I can do that. They will make the market. 25 million short. Brilliant. What price do you want? Excellent. Okay, well, I'm down here at the moment. I'll do that. Pop. Up we go. Candle pops. Propulsion gap appears. Order executed. Yeah. Speculative desks are there to make money for the banks. They use your money and my money to make money. Money makes money. If I have 25 million and I can press the button and dump all 25 million in one go, it's going to move. When it moves, I can then sell that 25 million back. As long as there's more liquidity up there than there was down there, I can fill all of my order there, buy all of my order there, and make the bit in the middle. Order execution. Because there's market makers making markets at different price levels. Yeah. And then you've got your investment funds, which are long-term speculative traders, which are looking at the long-term movements based on institutional and in fundamentals, basically, using scorecarding systems to decide whether or not the future price of the New Zealand dollar should be up or down in 4 to 12 weeks, 1 to 3 months. They will use the money to put in investments, which they will then return a profit on, which is your pension fund making money. Yeah. Your bank account making interest. So those are longer term, safer moves based on fundamentals, which of course they can also move. So those are the three main purposes of your bank. And obviously then you've got things like hedge funds, whose job is to basically execute large orders in the opposite direction of what a business might want to do. So if I'm going to export something from Japan to America, and it's going to take 3 months for the stock to arrive on the ship, when I sell that product to America, the yen will be at a certain rate. When I get my invoice paid in 3 months' time, the yen will be at a different rate. So I need a hedge placed in the market to cover the cost difference. I'm a farmer. I've got a massive crop. In 3 months' time, I'm going to harvest that crop. I need a futures price, futures contract, on what the price of corn will be then, or oil, or whatever rapeseed, whatever it is I'm harvesting. So the hedge fund will basically take an opposite side position to ensure that whatever the price is now, if you don't get that price in the future, the hedge will cover the difference. Hedge fund transactions. Again, this is why in COT, we look at specific parts. It was all explained in here. We look at specific parts of the futures market. We don't take into account any speculative, we don't take into account any non-speculative orders in the futures market when we're looking at what the positioning is, because those are hedge funds. Hedge funds are purposely taking the wrong side of where they think the market will go, because their job is to hedge the difference in price. But you see what I mean about this? You know, this is what I've been talking about all morning. There's nothing you can do to predict any of this, because it's changing on a day-by-day basis. You know, a war kicks off in Ukraine, it all changes. Look at oil price. What happened to oil price when the Ukraine war kicked off? Look what happened afterwards. Yeah. Banks made a lot of money. Yeah. Because they are speculating on the oil price rising because wars are good for oil. What does every vehicle in a war need? Petrol. Where does petrol come from? Oil. Have we got any more oil? No. Oh dear, they're going to charge more for it. Buy it. Okay, we've made enough money, sell it. This is nothing short of banks making a fortune because they can move it up and down. Who could have foreseen that? No one. Because we can't predict it. If we could predict the future, we'd be billionaires, all of us. Warren Buffett can't predict the future. So what he does is just buy stocks. Why? Because if stocks don't perform, businesses go bust and shareholders pull out of those stocks. So if you continuously buy the stock market every time it comes down, you will always make money. That's what Warren Buffett does. He only makes 8 to 10% a month, a year. But that's enough, isn't it, when you've got $25 billion invested in the S&P 500? All about money making money. And you will never find a system or a strategy that's going to help you do that if you're using some kind of automatic loss production, which is a stop loss, which is why position trading in the market reversal alerts EA works, because it's just extracting money out of the market when the banks do it, which we don't know. Anyway, I've stopped waffling now. So I've got a load more profit to take. I'm just going to have a look through this lot. I might close some of this out, like the CAD yen, for example, because it's all up in profit. Market's getting a little tired and just want to get some profit banked. And I might do a little bit of drawdown control on this US dollar Swiss and CAD Swiss, because they're not able to get them. Well, they are sort of moving, but they're struggling to get any movement. CAD Swiss, US dollar Swiss specifically, is really struggling down here. So if we're going to put another leg in, I just want to make sure I've got some profit in the bank to pay these off. I'll post in Telegram if I'm going to close any of this out, but there's plenty of profit on the table today with all these pound movements. But again, then is what it should do, is it? Right, I'll be back this afternoon, 2:20. We will trade the US indices. I'll be watching this today to see if I can get down to there. I will close the whole lot down there rather than going for a runner today because it's not running. So if I can get that 2R, that'll be done for the day, basically. But yeah, DAX is really not got any legs today. We've just come straight out of there. So if we can break it, brilliant. If not, we'll see what happens this afternoon. News-wise this afternoon, 1:30, be aware of the housing starts. May not move the market. If it does, fantastic. If not, then obviously we should get a decent open anyway today because it's earnings fortnight. So we've got only Goldman Sachs today, though, pre-market. Tomorrow is when it really kicks off. So we should get a decent amount of movement, hopefully, at the open off the Goldman stock market move. And we may well undo everything that we did yesterday as well. But at the moment, we're looking like we want to rally higher across the board. Certainly not dropping. So we'll see where we go today. But there's certainly call for a pullback on this move, isn't there? And a profit take on that. So we'll see what stocks they're going to move. But we'll trade that this afternoon and see how we get on. Anything you need, let me know. I'll be in Telegram. Otherwise, I'll be back this afternoon, 2:20. Back tomorrow morning, 7:50, same time. So if you need anything, let me know. Otherwise, have a good day, and I will hopefully see you guys later.